Online students, I have shared a material beta in the group related to MCQs, case scenarios. These are all the again MCQs guys of FM which were covered in your study material guys in RTPs and MTPs. So there are only a couple of MCQs this beta, not many, about 50-60 odd MCQs in the entire material. So we're going to discuss all the case scenarios beta today. So let's start guys, starting off with the first case scenario. Shall we start guys? एक दूसरे को बाद में देखो बेटा. ARC Limited is an established entity in the telecommunication industry with 49.95% market share. Most of its telecommunication lines are based on 2G, 3G, 4G spectrum. However, now the market is foreseeing a technological disruption in the form of 5G technology. To maintain a competitive advantage, it needs to heavily invest in 5G equipments and deploy the same for users latest by the end of year 3 from now. The entire project is going to cost 9,000 crores. ये पूरे sentence में only one important part, that is the total capital to be raised beta is. Are we clear guys? The management is wondering how such a huge amount is going to be raised. ये ना बेटा गलती से यहाँ पे आया है with answer, this should not come. Please strike the sentence. ये question 1 से लेके यहाँ तक बेटा it shouldn't have come here. That is actually the question बेटा नीचे. What will be the amount? मतलब same sentence वहाँ पे आ गया है. दिख रहा है वो नीचे question? So, a financial consultant has recently been hired by ARC to evaluate the various ways to raise capital. Guys, just pick up the relevant information. It will be dead easy to solve. The question is on computation of cost of capital. You just have to compute cost of equity, cost of debt, cost of preference share, capital. They will specify guys whether it is YTM method. If they do not specify anything, you can use the shortcut, that is approximation method. If they do not specify anything. A financial consultant has recently been hired by ARC to evaluate the various ways to raise capital. On the basis of his experience and knowledge, the consultant is of the view that telecom industry should not deploy fixed cost funds in excess of 40% of total capital. Meaning guys? Debt should not be more than 40% of total capital. It is not just debt guys. Read that sentence again. Fixed cost. Preference share capital is also a fixed cost funds. So that sentence beta means that debt plus preference should not be more than 40% of your total capital. Are we clear? First important point was total capital to be raised is 9,000 crores. Now we know beta that debt plus preference together should not be more than 40%. So but matlab kya beta, maximum 60% के साथ beta would be your equity. Also preference share capital should not exceed 10% of total capital. Total capital कितना था beta? 9,000 crores. Out of that 40% should be debt plus preference, that is 3,600. Out of this 3,600 also beta 10% of total capital, that is 900 crores should be in the form of preference. बचा हुआ कितना है beta? 2,700. That should come in the form of debt. Also currently, ARC currently has 2,000 crores in the form of reserves represented by short-term money market instruments. I have surplus cash balances to the extent of 2,000 crore rupees. Reserves, matlab retained earnings is also a source of capital. The source of fund, there is application of fund. Balance sheet ke equity and liability side pe beta you're seeing reserves and surplus. That will be represented by some asset on the asset side, right? They're telling us beta that it is represented by balances in money market instruments. Kitna paisa apne paas usme? 2,000 crores. Can I obviously use this? If I'm using this, will this come as a form of debt or equity or preference? Equity. You're using your retained earnings guys, so it will obviously form part of equity. Total equity kitna tha raise karne ke liye? 5,400. उसमें से guys 9,000 crores का 40% is debt. तो बचा हुआ 60% will become equity, 5,400. Out of 5,400, how much is retained earnings? 2,000 crores. बचा हुआ 3,600 crores. 400 crores will be in the form of fresh issue of equity. Are we clear? Next beta. It can raise money by way of debentures by issuing them at a premium of 5% with the redemption value of 110 after 5 years. The debentures would require an annual interest payment of 8 rupees per annum. Clear? What is my net proceeds? What is my redemption value? What is my interest per annum? Is everything given beta? The preference shares will be issued at a discount of 10% and redeemed at a premium of 10% after 10 years, requiring an annual dividend of 10%. Did they give us everything to compute cost of preference share capital? The company is skeptical of cash flows in near term after deployment of 5G and therefore would issue the above stated debentures only to the extent of 50% of total debt funds, and the balance will be raised by zero coupon bonds which will be issued at a discount of 40% and redeemed after 5 years. Total debt plus preference share capital was 3,600 crores. वो 3,600 crores में से बेटा 900 crores was preference share capital. बचा हुआ कितना है debt? 2,700. That 2,700 also beta we are dividing in the ratio 50-50 now. 50% is coming by way of issue of debentures and baki ka beta by issue of zero coupon bonds. So 1,350 crores beta is by way of debentures. 1,350 crores is by way of zero coupon bonds. समझ में आ रहा है नहीं आ रहा है? Do we have a bit for that? No. ठीक है. Next guys. The current price of share of ARC stands at an average of 147 rupees. The company has recently paid dividend of 11 rupees per share, and considering 5G deployment and other technological requirements in long run, it is likely to continue to retain 56% of its earnings. Reinvested earnings are likely to offer a return of 15%. When they give retention ratio, when they give return on reinvestments, what are they expecting us to compute? Growth rate. How do you compute growth rate using Gordon's model? B into R. So that will be 56% of 15%. How much is the growth rate, guys? 8.4%. This will become the growth rate of equity. Do we know D naught? Do we know P naught? P naught is 147. D naught is 11 rupees. Growth rate you've just computed, beta, it is 8.4%. It is planning to raise a part of additional equity by way of rights offering to its shareholders. The right shares entitles the existing shareholders to buy the shares at a discount of 15% to current average market price. So for new issue of equity shares, you will not take 147 rupees, you will take 147 minus 15%. Do you remember difference between cost of retained earnings and cost of equity? Cost of retained earnings beta should not be, for computation of cost of retained earnings, you should not consider any discount on issue of shares or flotation cost. But for computation of cost of equity, we should consider flotation cost. So you will take 147 rupees to compute cost of retained earnings. जो 2000 crores अपने पास है. You will take 147 minus 15% to compute cost of equity. Next beta. However, only 40% of the required fresh equity can be raised by way of rights issue. Total fresh issue of equity shares कितना था बेटा? 3,400. उसका 40% guys. 1,360 will come by way of fresh issue of rights shares. The balance equity portion will be raised by way of new shares of equity with differential voting rights. DVR का concept beta you're going to learn guys later. ठीक है? But equity shares with differential voting rights, the concept is both in accounts as well as in law guys. I'm not sure if you're aware. We can issue shares as such beta that has lower voting rights. Differential voting rights के साथ shares issue कर सकते हैं बेटा. जैसे Tata Motors has issued DVR as such beta, their voting power is only 1/10 of the normal equity share. But then they get a little higher dividend, 15 paise. They're now converting that into normal share, though it is not allowed as per law to convert. तो वो लोग क्या कर रहे हैं? They are buying back DVR. As a consideration, they're not giving cash, they're giving normal equity shares. So they are like, we are not converting DVR into normal equity shares. We are buying back first. उनके लिए पैसा देना पड़ेगा ना. But instead of giving cash, we are giving. जैसे Snapchat has issued equity shares with zero voting rights because they didn't want to dilute the control of the promoters. So it is very common as such better to issue shares as such guys with. ये कौन issue करता बेटा? The ones who want to depend on equity and they do not want to issue debt, but they also do not want to dilute their control. So they would want to issue shares with lower voting rights. So here it says guys, so 3,400 का 60% guys, how much will come by way of differential voting rights? 1,360 was normal beta. 2,000, that's the answer to the first bit. 2,040. All right. Now, they will be promised a dividend of 1.25 times of ordinary equity shares. And due to lower voting rights, their cost of capital will require a premium of over 50% over ordinary equity shares. Whatever is their cost of equity guys, it should be 150% of their normal cost of equity. Why do differential voting rights guys have a higher cost of capital, higher risk? किसको ज़्यादा प्रेफरेंस रहेगा? ऑर्डिनरी इक्विटी शेयर्स. जैसे द वैल्यूएशन गैप बिटवीन टाटा मोटर्स का नॉर्मल शेयर एंड डीवीआर एस बेटा वंस अपॉन अ टाइम वाज 100%. मतलब if this was trading at 60 rupees, that was trading at 120. Gradually that difference as such guys came down to 30-40%. As the company keeps growing better, the valuation gap keeps reducing. The holders of DVR made a much higher percentage return than the holders of normal ordinary equity shares. But anyways beta, यहाँ पे the question is very clear. You should take cost of equity guys for these shares to be 150% of the normal one. तो ये जो normal है ना बेटा, that should be based on 147. That should not be based on 15% discount, because that is actually our cost of equity. Only the fresh issue of shares beta is costing us more. Is that clear guys? Yes or no beta? So for cost of differential voting rights, information is already given in the question. समझ में आया question? हाँ या ना guys? Let us write beta this. We will compute everything beta bit by bit. Question is simple guys, it's not complicated. You just have to pick up the information in a correct way. Online students, I hope you have understood the question better. So what is the total capital to be raised? Total capital required guys. Total capital required is 9,000 crores. Out of this 9,000 crores guys, the question says maximum fixed cost funds. Fixed cost funds मतलब क्या बेटा? Preference plus debt. Preference share capital plus debt बेटा should be 40%. 9,000 का 40%, that will be 3,000. इसमें से बेटा प्रेफरेंस शेयर कैपिटल कितना रहेगा? 10% ऑफ फिक्स कॉस्ट फंड्स और 10% ऑफ टोटल कैपिटल. 10% ऑफ टोटल कैपिटल रिक्वायर्ड गए, सो दैट विल बी 900 crores. It should not exceed beta, correct. So yeah, see, because नीचे देखो बेटा requirements में भी assuming that the maximum limits are to be adhered to. So whatever is the max, otherwise beta you will never be able to answer the question. Because it says it cannot exceed 40%, will you present infinite possibilities? What if it is 0.001%? What if it is 0.002%? इसीलिए requirement is very clear. Assume all the maximum limits are adhered to. That means guys, whatever is the maximum limit given, directly apply that only. Are we clear guys? How much is debentures plus zero coupon bond beta? Won't that become balance 2,700 crores? ये 2,700 crores में भी बेटा डिबेंचर्स कितना रहेगा और जीरो कूपन बॉन्ड्स कितना रहेगा? It will be 50-50 guys. 1,350 and 1,350 crores. This is debentures plus zero coupon bond. Are you getting this? After this beta comes what? Your equity portion. Your equity portion as such guys should be the balance 60%. How much will be the balance 60% guys? 5,000. इसमें से बेटा retained earnings कितना है अपने पास already? We already have earnings to the extent of 2,000 crores that can be utilized for the purpose of fresh investment, correct? Fresh issue of equity कितना है? Fresh issue of equity beta is 3,400 crores. Out of this fresh issue of equity guys, how much is ordinary equity shares? Ordinary shares as such guys is 40%. So how much will that be? 1,360. बाकी का will come in the form of DVR. DVR का मतलब क्या? Differential voting rights. 2,040. This is our capital structure. Understood guys? ये आ गया तो बाकी पूरा is normal computation guys. How are you better? Good. You're coming after 1 month, 2 months. Again, you'll see me on ethnic day of the next group. Okay. I know, but I thought it was ethnic day to ethnic day. Raju, Guys, now we'll have to start computing all the cost of capitals, guys. You have to, because last wala bit kya hai, guys? We have to compute anyways. Overall cost of capital bhi hai kya? Dekho ek baar. Fifth bit, guys. Did they ask us to also compute overall cost of capital? Yeah, that is nothing but overall cost of capital, required rate of return. Correct, kids? Starting off with, guys, क्या compute करें बेटा पहले? We will start off with cost of, यही order में जाएंगे, cost of preference share capital, cost of debentures, cost of zero coupon bonds. All right. First, starting off with preference share capital. Did you all copy this? Now, guys, can you go back and pick up the information that is relevant to preference share capital? KPF, guys. I will take the face value to be 100 rupees. You do not like 100, take anything else as such, guys. It is not going to make a difference. Face value beta 100, issued at a discount of. So net proceeds will be 90 beta. Redemption value, premium of 10% beta, that will be 110. What will be your dividend rate, guys? 10%. So preference dividend per annum as such, guys, will be equal to 10% of 100 rupees beta, that is 10 rupees every year. What is the total redemption period? 10 years, guys. नीचे requirement में देखो बेटा, did they specify YTM method? That means you will have to use YTM beta, accurate method, IRR method, guys, to arrive at cost of preference share capital. YTM method में क्या करते हैं बेटा? We equate net proceeds to present value of all future cash flows. Under YTM method, we equate the net proceeds, guys, to the present value of all future cash flows. So you are in search of a discounting rate, guys, where 90 rupees is equal to 10 into PVAF at 10 rupees, so 10% वो है, at R% for how many years? 10 years. Plus redemption value 110 into present value factor at R% for the 10th year. You are in search of a discounting rate, guys, at which this is equal. कोई shortcut method use करके approximate rate निकालो बेटा पहले, ताकि you know shortcut method से 12% आ रहा है. You will write 10 plus numerator में 2 divided by 95. Sorry, divided by 100. Correct, 12%. You can, if the options are close, you cannot. But because यहाँ पे options, none of them are very close to 12%, you know that the answer will be 12.37%. And use that only for that, yeah. यहाँ पे options are not very close, guys, so you can always compute using shortcut method and check whichever is the closest option. So using shortcut, you're getting the answer as 12%. You can now compute present value at 12%. कोई फटाफट करके बोलो बेटा मेरे को, क्योंकि इसके बाद में it is only procedural. The objective was to discuss these MCQs. Present value at 12% beta is equal to 91.9128. Present value beta at 13%. Increase the discounting rate. You want the present value to be 90 rupees, guys. That is why you will have to increase the discounting rate. Compute the present value at 13%. Online students, previous batch students, whoever are watching this is साथ बेटा तुम लोग compute करो. कितना है बेटा 13% पे? 91.9 9492 9192 13%. 667. Now you can do it on a proportionate basis, guys. 12% and 13%. This is 91.9192, guys, and this is 86.667. You would want to stop at what amount, beta? 90. Total difference यहाँ से यहाँ कितना है बेटा? And from here to here it is 1.9192. So for 1%, if it is changing by 1.91, sorry, कितना बेटा वो? 5.2522. For 1%, if it is changing by 5.2522, guys, for 1.9192, what shall be the proportionate change? .365. Please round off to 2 decimal points beta. Therefore KPF requirement के हिसाब से 2 decimal points है. It will be 12.37%. As per the requirement, guys, it is 2 decimal points, so that is why it will be 12.37%. Are we all clear about this? You will have to do it on a proportionate basis, guys. The value is at 12.37%. Kids, समझ में आया बेटा सबको ये? If you're all done with this, guys. I hope you're all done, beta. In case you're not done, copy the final answer, guys. You can just calculate later. Kya hua, Jitu? You're not getting the answer. Got it? Bhargav, got it? Now, guys, the next one is cost of debt, mein beta, but debentures. There are two cost of debt. One is zero coupon bond. The other one is debentures, guys. Debentures, beta. Can you tell me the information, guys? Face value assumed to be 100 because redemption value is given as 110. I told you whenever the market prices are closer to 100, you should always take the price to be 100 rupees. Face value 100, redemption value 110. Are you issuing them at issued at a premium of 5%, guys? So net proceeds will be 105 beta. What will be your interest amount per annum? 8 rupees. Did they give us tax rate anywhere in the question, guys? No taxes, guys, given. Now again, if this is YTM method is such better, what am I supposed to write, guys? 105 should be equal to 8 rupees into PVAF at some percentage, guys, for how many years? 5 years ka ye? 5 years, guys. Maturity period bit of debentures is only 5 years plus 110 into present value factor at R% for the 5th year. You can compute the answer using shortcut method, guys. You will know what is the approximate rate and then mark it. 8.37. The only closest option to that beta is 8.43%. Can we directly mark it beta now? Can I write therefore we know KD is equal to 8.43? कोई compute करा तो बोल दो बेटा present value. I'll write present value at 8%, present value at 9%. 106.8, 805, 9%. नमन तो सबका कैलकुलेट नहीं कर रहा है कुछ भी, तबीयत खराब है ना? 106.096. You will have to take this on a proportionate basis, guys, and get the answer. At 8%, guys, it is 106.805, and at 9%, beta, it is 102.6096. If you take this on a proportionate basis, you're going to get the answer. Are we clear, beta? Guys, you can please mark the answer, guys. We'll proceed to the next one. It's like a costing beta, starting my 1 hour 15 minutes, 2 case scenarios. You've understood this, right, guys? How will you compute cost of debt beta zero coupon bond? It's very simple, guys. Now isme to beta there's no shortcut method only. There's only one method, and that is YTM method. We use only present value method, guys, to get the answer. What is the maturity period of zero coupon bond? 5 years. If face value is 100 beta, net proceeds will be, you are issuing them at a discount of 40% beta. That means you will collect 60, and redemption value will be 100. So isme YTM method mein you will directly write like this beta, 100 rupees is equal to 60 into 1 plus r whole power 5. 60 rupees invested today is becoming 100 rupees in a span of 5 years. Can't you compute return using that? This will become the cost of a zero coupon bond. Guys, ऊपर का मैं पूरा present नहीं करा बेटा answer. You have to do it on a proportionate basis. You can do that later. You can write those values. How much is this, guys, now? You will write 1 plus r whole power 5, guys, is equal to 1.66667. Then beta you'll write 1 plus r is equal to fifth root of 1.66667. You know how to compute fifth root, guys? Press square root, guys. 12 times minus 1 divided by 5 plus 1 into equal to 12 times. You will get 1 plus r as 1.10. Kitna wala? 10.7572. Therefore, guys, KD here beta will be equal to 0.107572, rounding off to the nearest two decimal point, 10.76%. This will become your cost of zero coupon bond, guys. Any doubt in this, kids? Cost of zero coupon bond beta is 10.76%. Online students, I hope you're getting it. After this, beta, we are done with cost of preference share capital, cost of debt, cost of zero coupon bond debt. Now, cost of equity, retained earnings. Retained earnings के लिए P naught क्या लोगे, guys? 147. Finish this, guys, all of you first. Speed से copy करो. It's like writing accumulated balance is equal to principal into 1 plus r whole power n. Compound interest का formula. Yeah, correct, beta. Same thing, no? Net proceeds is equal to 100 divided by 1 plus KD whole power 5. 60 rupees is equal to 100 divided by 1 plus KD whole power 5, beta, is nothing but this, no? क्योंकि तो anyways cross multiply करके ही करने वाला है. Net proceeds should be the present value of redemption value, guys. The only value that you're getting in case of a zero coupon bond beta is redemption value. Are we all clear about this? Kids, are we all clear? बेटा समीक्षा वो मार्क करी ना, वो जो अभी मैं स्ट्राइक करवाया, तो देखो if you want to just write something on the top of the page, no, ताकि you know ये पेज में कुछ है बोल के, और just your एक A बोल के या कुछ तो भी initial लिख, ताकि लास्ट में मालूम पड़े कि these all pages पे there are mistakes. समझ में आया ना? You can write समीक्षा also, मतलब mistake बोला था ना मैंने. Yes, guys. Now beta, cost of equity, guys. Samiksha will help us. This is in respect of retained earnings, guys. First, beta, can you read the data given, guys? Is dividend paid given or expected dividend given? Will that be D0 or D1? D0 is how much, beta? 11 rupees. Existing market price, beta, average? 147. Retention ratio B, guys? What percentage of earnings are you retaining every year, guys? 56%. What is your return on investment? 15%. R, guys. Now, what will be your growth rate, beta? 56% into 15%, beta, that will be 8.4%. समझ में आ रहा है? Now, how will you compute D1, guys? D0 into 1 plus growth rate. 11 into 1 plus 0.084. 11.924. What's the formula for KE, guys, using all of this? D1 by P0 plus growth rate. So 11.924 divided by 147 plus a growth rate of 0.084. 5. Round off to 2 decimal points. 16.51%. पूरे requirement में बेटा 2 decimal point ही है इसीलिए. वन या 5-1? 5-1-1 बोल रहा है ये. पीछे बेटा पीछे 1-1 is not cost of equity बेटा, that is overall cost of capital. क्या कर रहे हो तुम लोग? He's just trying to cover up, guys, that he made a fool of himself. हाँ. Online students that was तने. अरे मालूम रहना ना बेटा कौन है ऐसा जो बात कर रहा है. हाँ. जरा रिकॉर्डिंग कर लूँ बेटा मैं पहले. कुर्ता क्यों नहीं पहने कहते हैं. Yes, guys. Tana is transitioning, guys, into what better? You are identifying yourself as something else. Yes, guys. We guys. Are we all clear about this? Cost of equity beta DVR. You can directly write beta 150% of normal cost of equity. Hi or na, guys? How much will that be beta? 1.5 times of 16.51%. 765. So that'll be 24.77%. ये DVR है guys. Now cost of equity rights issue guys. Rights issue के लिए बेटा everything else remaining constant. Guys, cost of DVR के लिए बेटा we do not even have to worry about the fact that they're giving them higher dividend. वो किस लिए दिया बेटा वो information is for question number 4. Using dividend, using growth rate, using cost of equity, we are supposed to compute P0. Reverse calculation. That is why they gave us dividend guys. Otherwise cost of equity for DVR is directly given that it is 50% more than normal equity. DVR के लिए बेटा rights issue के लिए what will you take P0 as? 147 minus 15% discount. How much is this? बाकी सब same बेटा अभी. You will write D1 divided by P0 plus growth rate. D1 is 11.924 divided by 124.95 plus a growth rate of 8.4%. How much will this be guys? 92. 17.94% beta will be your cost of equity rights issue. Can we all compute P0 guys? For DVR beta, can we compute P0? After that we'll compute overall cost of capital. समझ में आया सबको ये? For rights issue you will take discounted price. For retained earnings you will take existing market price. For DVR it is 150% of normal equity. भावेश हो गया बेटा ये? DVR का P0 कैसे करोगे बेटा? Can someone help me? D1 beta will be 1.25 times of normal dividend. हाँ या ना? What is your normal dividend? 11 point. So इसका 1.25 times. 94. Cost of equity of DVR beta is how much? 24.77%. Growth rate is still 8.4%. You know formula beta is P0 is equal to D1 by KE minus G. 14.905 divided by 24.77% minus 8.4%. 91.0. That is approximately 91.07. Option A guys. वो थोड़ा बहुत is because we are rounding off at multiple places guys. Did you all get this guys? You understood why he gave us D0 dividend details of DVR beta now? This is the first time that we are seeing DVR as such beta, but then it is nothing complicated, it is cost of equity only. इतना याद रखना, DVR is undoubtedly a more riskier instrument than a normal equity. Riskier मतलब बेटा they have less control over the entity. That is why people will not pay a premium. People would pay lesser price than a normal equity share for a DVR, though their dividend rights are more. Who's having the control? You do not have voting power beta. Differential voting right मतलब you have less voting power. So if you own 70% of DVR, your voting power will be equal to 7% of normal voting power. Someone else owning 7%, you owning 70% as such, beta, your voting right will be less. Company will have more control. Existing promoters. इसीलिए. That is why they issue DVR. Are you all done, beta? Now, guys, last bit, beta, KO computation, guys. This is minimum required rate of return. Minimum required rate of return, guys. The last bit, beta, is KO computation, guys. Minimum required rate of return. How will you do this, guys? Weighted average cost of capital. Fun fact, BSNL finally, beta, is investing in 5G. दे रहा है दुरुस्त है. BSNL was the only telecom operator who added up customers in the current month, previous month. Jio lost consumers, Airtel lost, everyone lost. BSNL was the only one that is adding consumers. Back, guys. So, preference, अपन starting में कौन सा किया? Preference share capital. What was the amount of preference share capital? 900. What is the cost of capital, beta? 12.37. After that, beta, we did debentures. Total amount by way of debentures? 1350. Cost of debentures? 8.43. Then we did, beta, zero coupon bond, ZCB, 1350 crores. Cost? 76%. Then we did, beta, retained earnings. How much? 2000 crores, 16.51%. Then we did, beta, ordinary shares that we are issuing. How many? 1360. Cost of capital? No, that is DVR, beta. 17.94%. DVR का amount कितना है, beta? 2040. उसका is 24.777. You have to now compute KO, guys, by multiplying weights and everything. You have to compute KO based on this, guys, and that will give us the answer, beta. Sum total of the entire capital is 9,000 crores. If you would want to write weights, beta, you can write weights first and then multiply by that. Weights, beta, would be 0.1, 0.15, 0.15. कोई 2000 by 9,000 करो. 0.2222. Let us write weights at least till 4 decimal points, beta. Final answer will round off. Ordinary shares 1511. So बचा हुआ, beta, would be 0.2267. Now compute KO, beta. Multiply weights with the cost of capital. 109. Match हो गया ना पक्का? 16.109, beta. So that is 16.11%. That is the KO given, guys. 16.109%, guys. So that is 16.11%. That will become your KO. Are we clear, Srileka? What happened with the answer match in there? Are we all clear, guys? हो गया बेटा सबका ये. Can we move to the next question, guys? Online students, I hope you got the answer, better. Moving to the next question. It's a very, very simple question, guys. We may write the answers there only. Majority of the questions are simple only, guys. Without yawning. Shall we start, guys? AHF Limited is a well-established organization. 16.11 बोल के लिखना नीचे टोटल हो गया. AHF Limited is a well-established organization known for its innovative products and services. With a strong financial standing and a commitment to growth, the company is exploring different financing options to fuel its expansion strategies. AHF is considering issuing debentures to raise funds for expansion and investment opportunities. The company aims to determine the cost of debt after tax under various scenarios of issuance, considering factors such as issue price and brokerage expenses. They're just telling you, beta, your objective is to compute cost of debt. Obviously, we will consider brokerage, we will consider issue expenses. Don't you take net proceeds into consideration, guys? CA Ananda, the Chief Financial Officer of AHF Limited, plans to issue 12 lakh 15% debentures of 100 each, redeemable after a fixed period of 10 years. You do not have to take total number of debentures, guys. Cost of debt can also be computed on a per debenture basis. Are we not anyways computing a relative term? So total number of debentures irrelevant beta. You know face value is 100 rupees. You know coupon rate is 15%. You know tax rate is 35%. Maturity period is 10 years. The cost of debt after tax is calculated by adjusting the coupon rate for tax savings on interest payments. Wow. He's telling us beta that please take interest net of taxes. Will you take interest without tax? Whenever tax rate is given beta, don't we compute all cost of capitals on an after tax basis only? Additionally, brokerage expenses, if applicable, are factored into the analysis to determine the overall cost of debentures. By analyzing the cost of debt under different issuance scenarios, CA Ananda can make informed decisions regarding its financing strategy. Understanding the impact of issue price and brokerage expenses on the cost of debentures enables the company to optimize its capital structure and enhance shareholder value. Continuous evaluation of financing options and market conditions will be essential for AHF Limited to maintain financial flexibility. रेट उसमें बेटा एक ही सेंटेंस वो जो था बीच में इंपॉर्टेंट था. फेस वैल्यू 100, कूपन रेट 15%, in tax rate is 35%, maturity period is. Now he's giving us different scenarios. What will happen if you issue debentures at par? What will happen if you issue them at 10% discount? He did not mention YTM anywhere, guys. He was not mentioning YTM anywhere. Which method are we going to use? Start, guys. You should get the answer better in a minute. Face value of each debenture is how much? 100 rupees. Coupon rate better 15%. So what will be your interest amount per annum? 15 rupees. What is your tax rate, guys? Maturity period 10 years. Formula kya beta? Shortcut. Let me just write the formula first, guys, and then we'll use common information. Plus RV minus NP by N whole divided by RV plus NP by 2. I gave the logic behind the formula also in the class, guys. Average annual expenditure divided by average amount outstanding. That is how we write this. Pehle we did YTM method, then we used the logic behind this formula, guys. Now first bit mein beta net proceeds kitna hai? 100. Nothing is given. They're also redeemable at par. So what will be the answer, guys? Achha, you do not even have to use the formula, guys. If they're issued at par, redeemed at par, cost of debt will always be equal to interest rate into 1 minus tax rate. Formula use karoge to bhi wahi answer aayega. ठीक है? You do not have to write all of this. You can directly write beta that it is equal to interest rate into 1 minus tax rate. Second bit mein beta they are being issued at. You will take redeemable value as still 100 rupees beta. So cost of debt will be equal to 11.31. That is 11.32% as per the options. समझ में आ रहा है ना बच्चों? Third bit, guys. Issued at 110 rupees. Redeemable value beta is still 100. ऐसे देना ना एग्जाम में. 8 point. It will be 8.75 divided by 105 rupees. Numerator में you'll get 8.75 divided by average 105. Fourth bit, guys. You should still deduct 2% brokerage, guys. Though the issue price is par, beta. Issue price कितना है? 100 है. But your net proceeds will get adjusted because of brokerage. 100 minus 2% will become. Guys, I believe we did this as the first question of cost of capital. Do you remember we did multiple cases in the very first question? So this beta will be 15 into 1 minus tax rate beta plus 100 minus 98 divided by 10 whole divided by 100 plus 98 by 2. 10.0. Ab last wala beta. You should do it whenever current market price is given. What did I tell you beta? Assume that they are issued at the current and compute current cost of debt. याद है नहीं है? So net proceeds will be equal to market price beta 120. Redemption value is still 100, guys. So your KD beta will be equal to 100 minus 120 by 10 beta. Numerator में 7.75 आएगा divided by 110. 7.0045. That is 7.05%. This is the answer, guys, to all the bits. Fifth bit. Online students, तुम लोग भी टाइप करके आंसर भेज सकते हो बेटा या फिर कीप सॉल्विंग. Are you all clear about this? Guys, are we all done with this beta? Pretty easy, right? Yes, beta. Are we all done, guys? Shall we read the third question? शक्लें सीधी बनाओ बेटा. उसकी कहानी सुन के शक्ल बना रही थी या नेक्स्ट क्वेश्चन देख के? वो सुन के. क्वेश्चन नंबर 3, guys. चंचल. KBL, guys. क्या है वो? कैवल्य बोधि Limited has completed 35 years of operations in India. It has many subsidiaries and associate companies in more than 100 countries. Still not streaming on Netflix, beta. KBL's business includes home and personal care, foods and beverages, and industrial and agricultural and other products. Properly diversified. It is one of the largest producers of soaps and detergents in India. The company has grown organically as well as through acquisitions. Inorganic growth, organic growth. याद है ना? Over the years, the company has built a diverse portfolio of powerful brands, some being household names. It is planning to acquire one of the competitors named Prestige Limited, which would enhance the growth of KBL. The consideration will be 1.5 times of its average market capitalization. मार्केट कैपिटलाइजेशन मतलब number of shares outstanding multiplied by current market price per share beta is market capitalization, the total market value of the company based on the prevailing market price. So if the total market value of the other company beta is say 10 crores, you are going to pay them 15 crores to acquire them. You are willing to pay 50% more than the current market price. Is that clear? Next beta. Prestige Limited has 1,30,000 equity shares outstanding and its shares were traded at an average market price of 45 rupees as on the valuation date. So how much is 1,30,000 shares into 45 rupees? 58 lakhs. This is the current market capitalization of Prestige Limited. How much are you willing to pay? Into 1.5 times. 87 lakhs. One of the bids beta. Fourth bid में वो पूछ रहा है calculate the amount of purchase consideration. So that will be 87 lakhs 75,000. Any doubt guys? Next. However, this consideration amount will be paid equally in 5 years, where the first installment is to be paid immediately. This 87 lakhs 75,000 beta is being paid over a span of 5 years. Divided by 5 karo beta. 17 lakhs. Every year you will pay 17 lakhs 55,000, but first installment is payable upfront, matlab every year it is payable at the beginning of the year. Fifth bit देखो बेटा, what they are asking us to do. So यहाँ के इसके लिए बेटा it is very important to know whether the amount is payable at the end of the year or whether the amount is payable at the, जैसे year 1 के beginning में दे रहे हो बेटा, you will not discount it. Year 2 के beginning में what you are giving बेटा, you will discount it only for 1 year. Like that it will come only till the 4th year. Year 0, year 1, year 2, year 3 and year 4. Are we clear? Please underline that बेटा. Payable immediately. उसके ऊपर लिख सकते हो बेटा at the beginning of the year. ये जो immediately है बेटा, this means payable at the beginning of each year. Beginning of the year. Now, KBL will raise the funds required through debt and equity in the ratio of 30-70. The company requires the cost of capital estimates for evaluating its acquisitions, investment decisions and performance of its businesses. We all know better that we compute KO only to evaluate all investment decisions. याद है नहीं है? KBL's share price has grown from 150 rupees to 301 in the last 5 years, and it will continue to grow at the same rate. Growth rate is not given, it should be computed on the basis of past. 150 से 301 हो चुका है बेटा in a span of 5 years. Can we all compute growth rate using that? Share price has grown from 150 rupees to 301 rupees beta. You will have to compute growth rate using this. ज़्यादा हो गया बेटा. It is only doubling. Approximately double हो रहा है ना बेटा. 72 divided by R, 72 by 5. The answer should be closer to 14.4%. 14.94. Guys, you understood what I just did? 150 rupees is becoming 301. Isn't the amount doubling in a span of 5 years? And do you remember the rule of 72 that you have learned in foundation? It takes 72 divided by R for an amount of investment to double. So 72 divided by 5 years is the approximate interest rate, 14.4%. But that is approximate answer. Accurately, you still have to do better using IRR method. The time value of money method beta, 4th chapter, foundation max. Now guys, back to this beta. It will continue to grow at the same rate. So you computed the growth rate guys. KBL pays dividends regularly. It recently paid a dividend of 8 rupees. This is D naught. For the calculation of equity, an average of 52 weeks high market price in the last 5 years is to be considered. P naught beta is average of last 5 years prices. Can you add all the 5 beta and divide by 5? Two 250.4. समझ में आ रहा है? P naught you will take 250.4. You will not take last price. ये question बोल रहा है but I cannot help it. Are you getting it? Now comes a new point. KE calculated as per growth model holds a weight of 0.6. You are not computing cost of equity using only one method. You are computing cost of equity using 2 methods, and then you are taking an average of those cost of equities. As per growth model, matlab dividend discount model, the weight of cost of equity is only 0.6. बाकी का is coming through CAPM. The company also wishes to calculate equity's expectation using CAPM, which holds a weight of point. You compute cost of equity using dividend discount model. You compute cost of equity using CAPM model. Then take an average, not simple average. What are the weights to be assigned? 0.6 to that, 0.4 to this. Pretty simple, guys, but then we're seeing it for the first time. Are we clear? The risk-free rate is assumed as the yield on long-term government bonds that company regards as about 8%. RF is given, guys. CAPM का formula क्या है? RF plus beta into RM minus RF. KBL regards the market risk premium to be 11%. What is this? RM minus RF is 11%. This is already RM minus RF. Risk premium है ये, market return नहीं है. Beta of the company beta is point. Can we all compute, guys, using this? अपन, we will do it. समझ में आ गया ना? Next beta. KBL will issue debentures with a face value of 10,500, which is to be amortized equally over a life of 7 years. Do you remember amortization of bond? Excellent. You repay, guys, the principal portion over the period of 7 years. Normally, beta, in a debt security, principal is repaid directly at once. Beta, we did a similar question, guys. 5-year का bond था, amortization of bond बोल के computed present value. So यहाँ पे बेटा the face value of the bond is 10,000 divide by 7. You will pay 1,500 rupees principal every year, guys, back to the investor. Next. The company considers the effective rate of interest applicable to a AAA rated company with a markup of 200 basis points as its coupon rate. Whatever is the AAA rated rate now, plus 200 basis points. 100 basis points means 1%. 200 basis points means 200%. जैसे you write 100 पैसे as 1 rupee बेटा, वैसे ही interest rate को if you're dividing into 100 percentiles, you call it as a basis point. If I say interest rate is increasing by 10 basis points, it means 0.1%. If I say interest rate is increasing by 25 basis points, it means point. Globally, it is normal better to talk in terms of basis points. बोलो क्यों they talk in terms of basis points? Because the interest rates are very less. See, if interest rates are increasing from 0.1% to 0.12%, they will not say it is increasing by 0.02%. Instead, they will say it has increased by 2 basis points. Are we clear? Now, so what should be the coupon rate on our bond better? Plus 2%, 9 point. This is coupon rate. Is that clear, guys? Hi, na beta. Now, calculate cost of equity under both the methods. Calculate overall cost of equity. Calculate cost of debt. If the intrinsic value of debenture today is 9,740, we do not know cost of debt. We only know interest rate, coupon rate. We only know what is the face value and payment period, guys. Using current market price and all of this, I will have to compute cost of debt. I cannot use shortcut method, guys, here. I will have to use only YTM method. Can someone tell me the reason? The amount outstanding every year is drastically changing. I told you better that shortcut method can be used when the amount outstanding more or less remains constant. We cannot use shortcut for zero coupon bond. I said because there is no interest component, only पूरा का पूरा difference is principal. यहाँ पे practically सोचो बेटा, first year के beginning में principal outstanding is 10,500, then it is 9,000, then it is 7,500, then it is 6,000, because we are paying how much back every year? I cannot use shortcut method. I will have to use only YTM method. I know market price, I know the payments, I will have to compute cost of debt. Understood? Calculate weighted average cost of capital. You already know better that the weight of debt and equity is 30:70. We can compute weighted average cost of capital. Then compute present value. Everything better is normal after that. Question समझ में आया? So let us go in the order, guys. We will first compute what? Cost of equity. Using which approach? पहले using growth approach, guys. Using growth approach मतलब कौन सा approach बेटा? Dividend discount model. MPS is increased from 150 rupees. Sir, in reality, the share price growth rate is equal to growth rate of dividend. नहीं बेटा, यहाँ पे दूसरा option नहीं है. He has a doubt, guys, whether the growth in share price is it equal to growth rate in dividend? No. Growth rate in dividend can be something else. Growth rate in share price, beta, can be something else. Just if you see a lot of companies, beta, their earnings must have increased by 20% CAGR over the last 5 years, but market price per share has increased by 40% CAGR. So that is why we talk about markets not being correctly valued. Over a longer period, they should match, guys. Over a longer period. But then, guys, over shorter periods, you will not have. यहाँ पे option नहीं है बेटा. This is the only way that we compete. क्योंकि वो आगे क्या दिया? This growth rate is expected to continue. Are we clear? So 301 beta is equal to 150 into 1 plus g whole power 5. G कितना है? 9? 947, guys. That will be 14.95%. इसमें ना बेटा they did not give a table, but answers में they said referring to the table growth rate is 15% बोल के. That means बेटा they gave some approximation values which they forgot to print. Now we do not have that table, we are writing 14.95 only. But when we compute cost of equity, we may get a difference of 0.01, 0.02%. ये हो गया बेटा सबका. What is D naught, guys? दिया हुआ है क्वेश्चन में 8 rupees. D1 beta will be 8 rupees into 1 plus 0.1495. 9.19. P naught beta to be considered is average price of last 5 years. कितना बोले थे बेटा तुम लोग ये? Add all the prices and divide by 5. Now compute cost of equity using dividend discount model. गर्मी हो रही है ना यार. एसी का रिमोट कहाँ है? एक बार देना बेटा. सेटिंग क्या है कि इसमें? मजाक उड़ाओ. KE beta will be equal to D1 by P naught beta plus growth rate. D1 is 9.196 divided by 250.4 plus a growth rate of 0.1495. Can you tell me the answer, guys, and check if it is matching with the answer given there? 62%. Can I take it as 18.65 beta given? Why am I taking this as 18.65? वो options के हिसाब से बेटा, ताकि फिर average cost of equity match हो and overall cost of capital match हो. I already told you why are we getting an approximation error beta, because they directly considered growth rate as 15%. So if you do that, maybe even you will get 18.65%. Now guys, using CAPM. RF is given as how much beta? कभी कभी क्वेश्चन कैसे फ्रेम करते समझ में नहीं आता बेटा. वही अभी RF is 8%, but a AAA rated bond is getting 7.5%. नीचे देखो AAA rated का कितना दिया हुआ yield? RM minus RF beta, market risk premium is how much? 11%, guys. And beta, guys, is? So what will be your cost of equity, guys? 8% beta plus 0.78 times of 11%. So that will be 16.58%. This is the answer to the first two bits, guys. 18.65% and 16.58%. What will be your overall cost of equity? What are the weights to be given, guys? 0.6 beta to growth, cost of equity as per growth, and 0.4 beta to KE as per CAPM. So I'll be 0.6 of 18.65 plus 0.4 of 16.58. How much will that become? 82%. 17.82%, guys. Are we all clear about this? 0.6 of this beta and perfect beta. Are we all clear about this? Any doubt, beta? Share price is an average price prevailing as on the date of acquisition, beta, and these are 52-week high prices in the last 5 years. 52-week high prices मतलब बेटा it is not the average price. अभी एक सेकंड के लिए अगर शेयर प्राइस बेटा 1500 टच करके पूरे साल अगर 1100 ट्रेड हो रहा है ना, फेयर वैल्यू कैन नॉट बी कंसिडर्ड टू बी 1500. एवरेज प्राइस इज ओनली 1100. आर यू गेटिंग द पॉइंट बेटा? 52-week हाई मतलब क्या गई? लास्ट 1 ईयर का सबसे पीक पॉइंट कौन सा है शेयर प्राइस का? जैसे नन ऑफ द शेयर्स राइट नाउ आर ट्रेडिंग एट 52-week हाई. All of them have corrected by 20%, 30% over the last 1 month. एक महीने पहले almost every stock was trading at 52-week high. Market was continuously on the increase, but all the shares were trading at a very high price. अभी जब तक next run नहीं आएगा वो 52-week high उतना ही रहेगा. Once it starts, जैसे डीमार्ट में it might take time as better to breach that levels. नहीं, शायद 52-week high ही कम हो गया होगा ना, क्योंकि ये तो बहुत सदियों से हाई से नीचे है ना. Yes guys. Cost of debt बेटा now, पढ़ाई पे ध्यान दो बेटा. What is the face value of the bond guys? 10,500. Amortized equally over how many years? Amortized equally over 7 years. मतलब क्या हुआ बेटा? 1500 principal to be repaid every year. 1500 principal to be repaid every year. Correct guys? Once we get this beta 1500 principal to be repaid every year guys, what next beta? Coupon rate guys is whatever is AAA rated ka yield plus 2%. So that will be 7.5% beta plus 2%, that will be 9.5%. What is the current price? हो गया तेरा ये? कितना है cost of debt? 9,740 हो गया वो तो. हाँ हो गया ना. कॉस्ट ऑफ डेट कितना अच्छा वो. व्हाट आर योर कैश फ्लोज एवरी ईयर गाइस? पे अटेंशन बेटा. एक साल का सुन लो, बाद में तुम कर लेना. ईयर 1 गाइस, हाउ मच प्रिंसिपल विल यू रीपे? हाउ मच इंटरेस्ट विल यू गे? 9.5% ऑफ 10,500. फर्स्ट ईयर के लिए तो बेटा प्रिंसिपल आउटस्टैंडिंग इज 10,500. यस और नो बेटा? हाउ मच? 997.5. Total cash flow that you will give them beta is 2497.5. Second year you will repay principal again guys, but then you will now give 9.5% of 9,000. Why 9,000? You have already paid 1500 at the end of first year guys. Only 9,000 principal is outstanding. कितना है बेटा? So it will become 23. ऐसे you will have to present for all the years. समझ में आया? कॉपी करो. These are the interests that you're going to consider guys every year. ये कितना है बेटा अभी? Third year 712.5. So this will be 2212.5. 712 मतलब this is reducing by how much बेटा? 37 and 5 142.5. Correct? So 570. Huh? 570 guys. So this will become 2070, reducing further by 142.5 guys. That means 437.5. 27.5. So this will become 1927.5. and उसके बाद में बेटा reducing by 142.5 further मतलब 295, 285. क्या कर रहा हो यार 10 रुपये तब से. तो 1785 guys. This is 142.5. This will become 14142.5. अभी तो बेटा you have to use what? YTM method to arrive at cost of debt. This is only determining cash flows. Now you have to equate guys the net proceeds better to the present value of all of these cash flows. Undoubtedly guys, exam में common sense use करना बेटा. Answer cannot be 9.5%. Answer cannot be 7.5%. Are you not paying a coupon of 9.5%? Plus, are you not issuing the debenture at a discount? Won't that increase your cost of debt? So your cost of debt has to be more than 9.5%. 5%. It cannot be 9.5, it cannot be 7.5. बचे हुए ऑप्शंस क्या है बेटा? 15 एंड 12, उन दोनों में से एक रहेगा. 15% तो कुछ ज़्यादा ही हो गया बेटा, बिकॉज इट इज़ नॉट दैट यूर इशूइंग डिबेंचर एट अ हेवी डिस्काउंट ऑल्सो. Yes, beta, are we all done? Now what will you write, guys? Net proceeds, beta, should be equal to present value of all future cash flows. Can someone compute, beta, and tell me the values? Net proceeds should be equal to the present value of all the future cash flows, beta. Shortcut method cannot be used. Why? Principal is changing every year. ठीक है? So beta तुम्हारे को discounting rate लाना है बेटा, at which present value कितना है? 9740. You will write every year cash flow is different beta. 2497.5 plus 1 by KD, guys, plus 2355 divided by 1 plus KD whole square. ऐसे बेटा you have to do it for 7 years. Can someone compute, guys, present value at 12% and tell me the answer? Compute present value of all of this, guys, at 12%. I'll write the answers, guys. तुम लोग बाद में जिसको प्रैक्टिस करना है कर सकते हो. Present value, guys, at 12%. हाँ बेटा 97 at 12% बेटा present value is equal to 997. Therefore KD is 12% बेटा approximately, क्योंकि options में anyways वही दिया हुआ है ना. At 12% you're getting the present value beta as 9738.67. Therefore KD is 12%. तो क्या पूछ रहा था बेटा मानस? Trial and error method. I know that the answer is more than 9.5, so I might start with 10 or 11% and so. हाँ बेटा 9806 आ रहा है, वापस कर 97. करेक्ट बेटा. Therefore KD is 12% बोल के लिखना गाइस. Cost of debt, guys, is 12%. हो गया guys? Can I proceed to the next one? Can you all compute KO, guys, now? Weight of equity into cost of equity beta plus weight of debt into cost of debt. What is your debt equity ratio beta that they told in the question? डेट इक्विटी बेटा क्वेश्चन बोलता है 30/70 है गाइस, दैट मींस वेट ऑफ इक्विटी बेटा इज 0.7, कॉस्ट ऑफ इक्विटी दैट वी गॉट बेटा वाज 17.82%, वेट ऑफ डेट इज 0.3, कॉस्ट ऑफ डेट बेटा दैट वी गॉट वाज 12%, कितना बेटा एवरेज? 16.07% beta will become your KO guys. Any doubt in this? అర్థమైందా ఇది? What is the market capitalization of the other company beta? It will be 1,30,000 shares of which company beta? ये किसको खरीद रहे अपन? Prestige. 1,30,000 shares beta multiplied by 45 rupees. So this was 58 lakhs 50,000. Purchase consideration guys, are you giving them the same amount or 50% more? So this is 1.5 times of market capitalization. So that beta will be 1.5 times of 58 lakhs 50,000 guys. 87 lakh 75,000. This will become your purchase consideration guys. Are we paying this amount upfront or are we paying this amount over a span of 5 years? Payable over 5 years. Per annum beta कितना है? 17 lakh. However, is it payable at the end of each year or payable at the beginning of each year? Payable at the beginning of each year. Market cap of the other company beta is 58 lakhs 50,000. You are going to give them a purchase consideration of 87 lakhs 75,000. This amount is payable over a span of 5 years, which is 17 lakhs 55,000 beta. किस में आंसर गलत है? कौन सा आंसर? फिफ्थ वाला प्रेजेंट वैल्यू तो कंप्यूट कर लिया 16.07 पे. ऑप्शन बी 67 lakhs. विल चेक बेटा. हाँ, please compute guys and check the answers guys. You have to discount at what rate beta? Why 15%? Huh? They have a KO guys of 15% as such beta. What is your cost of capital guys? Arrive at the present value beta. अभी ऐसे में बेटा एग्जाम में आंसर मैच हो रहा तो क्या कॉन्फिडेंस के साथ आते अपन? समझ में आ रहा ना गाइस? फिफ्थ बिट गाइस, discount cash flows at what rate guys? At 16.07%. That is KO of our company. Shouldn't we want a minimum return guys of 16.07% when that is our cost of capital? Do not forget it is your 0, 1, 2, 3, 4 beta. Cash flow कितना है? 17 lakh 55,000. फर्स्ट वाले को डिस्काउंट करने की जरूरत नहीं है, बाकी के चार को बेटा यू कैन मल्टीप्लाई बाय एन्युटी फैक्टर. You do not have to discount the first one guys. Yes or no beta? You can write present value as first one I can directly write 17 lakh 55 plus बाकी के चार को बेटा I can multiply by what? PVAF at what rate? 16.07% for how many years? 4 years. How much will that become guys? 9? That is option D guys. 66, 58, 997. If they give discounting factors in the question beta for questions like this, then there is absolutely no problem. Your answers will perfectly match with them. 66 lakhs 58,997. Prestige ka KO is irrelevant beta. Perfect. Because we are acquiring debt and everything at a little higher rate. Our KO is 16.07. That is what you will have to apply. Done, guys. Shall we start the next question? क्या वो आंसर मैच नहीं हो रहा है बेटा? अब हुआ है. जरा क्या बोल रहा है वो? परी मार रहे पर. Question number 4, guys. Fourth one. Good for you, sir. आप पढ़ लो ने. Shall we start the fourth one, guys? Is anyone still doing this? Sir, prestige का KO is irrelevant, right? Yes, but I just said prestige का KO is irrelevant, guys. You have to discount cash flows at your cost of capital. You are incurring so much, so please discount and then check whether you will be able to generate so much return or not. ठीक है बेटा. Case scenario 4, guys. Thiago is an all-equity company engaged in the manufacturing of batteries for electric vehicles. There has been a surge in demand for their products due to rising oil prices. The company was established 5 years ago with an initial capital of 10 lakhs. And since then, it has raised funds by IPO, taking the total paid-up capital to 1 crore. Comprising of fully paid equity shares of face value 10 rupees. ये सब भाषण किस लिए बेटा? Telling you existing equity share capital is how much? 1 crore. The company currently has undistributed reserves of 60 lakhs. So अपना current total capital employed कितना है बेटा? 1 crore 60 lakhs. First sentence says it's an all equity finance company. We have equity share capital worth 1 crore. We have reserves worth 60 lakhs. Put together 1 crore 60 lakhs. The company has been following a constant dividend payout policy of 40%. If they are paying out 40%, how much are they retaining? 60%. The retained earnings by company are going to provide a return on equity of 20%. Retention ratio is 60%. And then return on equity is, what will be your growth rate, guys? 12%. यहाँ पे first bit में answer गलत mark हुआ है बेटा. It is option D 14.99, but then I'll tell you guys. The growth rate itself is 12%. Can the cost of equity be less than growth rate? No. अपन मैं बताता हूँ बेटा, जरा आओ पहले इसमें. The current EPS is estimated at 20 rupees and prevailing P ratio of the company is 15x. That means the current market price beta should be 20 rupees EPS into P ratio 15 times. How much is that beta? 300 P naught hai. Can you also compute D naught beta using this? What is your payout ratio? 40% of 20 rupees. D naught is 8 rupees. इतने से information में they give everything that you need, guys, for computation of cost of equity. D naught is 8 rupees, growth rate is 12%, P naught is 300. समझ में आ रहा है? Yes or no, guys? Now, the company wants to expand its capital base by raising additional funds by way of debt, preference and equity. The company requires an additional fund of 1 crore 20 lakhs. Right now we have a fund of 1 crore 60 lakhs. We need an additional funding of 1 crore 20 lakhs. Our total capital base will become 2 crore 80 lakhs. The target ratio of owned funds to borrowed funds is 4:1 post the fundraising activity. Why is this sentence given? Weights to be assigned. छोड़ो बेटा पहले. Use this and tell me how much is the amount of debt, how much is the amount of owned funds. Equity including preference will be 2 crore 24 lakhs. Debt beta will be 56 lakhs. Borrowed funds में preference cannot be included, guys. Preference will form part of equity for this purpose. So 4:1 ratio, guys. 280 lakhs should be your combined capital base. On that 280 lakhs into 4/5 and into 1/5. Understood? Immediately next beta, capital gearing ratio is to be kept at 0.4 times. 0.4x मतलब 4.4 times. Instead of writing times beta, it is very common that in financial Okay, न्यूज में बेटा we write x. जैसे if I write p ratio is 15x, it means 15 times. समझ में आ रहा है नहीं आ रहा है? If I write m market price to book value ratio as 3x, it means 3 times. It's very common to just write x बेटा. Multiple of 3 मतलब 3 times of that. Are we clear? Now capital gearing is to be kept at 0.4x. Why is this given? We can compute how much is the amount of preference, how much is the amount of debt. How will you tell me beta what should be the amount of preference and what should be the amount of equity? Gaurav, preference and equity. Capital gearing ratio का formula आता है बेटा. All capitals with fixed obligations in the numerator divided by equity. Equity only includes equity, share capital and reserves and surplus. It does not include. एक proud of you बेटा. लंगूर, this is the only important part of the question बेटा. ये आ गया समझो, बाकी पूरा question normal है. $30 प्रेफरेंस शेयर कैपिटल, गलत जवाब. $50 दैट इज डेट बेटा, वो हो गया है. अभी प्रेफरेंस चाहिए, गलत जवाब. 64 lakhs, गलत जवाब. तो वही 56 और 8 ऐड करा, ये रे. तू 8 बोला, डेट 56 है, ये दोनों को ऐड करके 64 बोल रहा. वैभव साहब 64 ही आते को भी. व्हाट्स योर राशि? Excellent answer. Preference is 24 lakhs. रिधि आया देखो भी 24. Perfect guys. Pay attention guys now. Guys, अगर ये आ गया ना बेटा, पूरा क्वेश्चन खत्म हो गया. इसके आगे that is normal cost of capital computation and multiplying by weights. All right. So all of you pay attention guys. Existing equity share capital plus reserves and surplus beta is how much? 1 crore plus 60 lakhs. 100 and what is the additional capital to be raised? Additional capital to be raised beta is 1 crore. What will be your total capital beta? 280 lakhs. Owned funds to borrowed funds beta. Owned funds guys here will include equity share capital, retained earnings and preference share capital. This will be debt beta. Should not be in more in the ratio beta of, should be in the ratio of 4:1. 280 lakhs into 4 by 5 beta is 200 and this is 280 lakhs beta into 1 by 5. 50. This is one computation. Khatam. Yes or no guys? Next beta is capital gearing ratio. Capital gearing ratio should be how much beta? 0.4. This beta will be equal to long term debt plus preference share capital divided by equity share capital plus reserves and surplus. If this is x, this will be 280 minus x, correct? Total capital is 280 lakhs. Can that change guys? Total capital is 280 lakhs. If equity is x, numerator is 280 minus x. Any doubt? 0.4 beta is equal to 280x, 280 minus x divided by x. So 0.4x is equal to 280 minus x beta. कितना आएगा बेटा x? 200 lakhs. समझ में आ रहा है guys? This is equity share capital beta plus reserves and surplus is 200 lakhs. We already know equity share capital plus reserves and surplus plus preference share capital should be how much? How much will be your preference share capital? समझ में आया नहीं आएगा इस क्या किया? X beta I've taken as equity share capital plus reserves and surplus. Any doubt in this part guys? Did they ask us to compute amounts? No, they did not ask us. They only have to compute marginal cost of capital. So guys, what is the additional equity to be raised? Additional equity to be raised guys. टोटल 200 lakhs डाले माइनस एग्जिस्टिंग कितना है, सो एडिशनल इक्विटी टू बी रेज बेटा इज पूरा का पूरा प्रेफरेंस शेयर कैपिटल इज एडिशनल ओनली नो, बिकॉज राइट नाउ वी डू नॉट हैव एनीथिंग. एंटायर डेट इज एडिशनल ओनली नो, because right now we do not have any debt. Additional debt to be raised beta is 56. All of this is 100 and this is your new capital that is to be raised. Once we figure out this, the entire answer is normal. समझ में आया? Copy करो बेटा ये part. All of you make a note of this, guys. If you're all done with this, beta, let us start continuing to read the remaining part of the question. Yes, बेटा, मेरे हिसाब से रिजल्ट क्या रहेगा? रिजल्ट वाले के दिन क्या करना? Yes, guys. Just got to know better from some reliable source that ICE is considering another alternative. The pass criteria will be applied to MCQs and subjective separately. That means if the paper is for 100 marks and there are 30 marks MCQs and 70 marks subjective, you're supposed to score a minimum of 28 in subjective. Even if you score 30 on 13 MCQs, you have to score a minimum of 40% in subjective, because a lot of people are going only by MCQs. They're like, we'll score 13 MCQ and try to get 10 marks here better and try to get those 40s. That defeats the entire purpose. So abhi tak beta there's no final this thing, but yeah, there is many discussions and it will take a lot of time beta. Many members are against it. So I don't think it is likely to get implemented, but if implemented as such, I think it's a good move as such to cut down on the percentages. Because there are papers like audit, guys, and there are other papers. वहाँ पे you depend heavily as such, guys, on MCQs to clear the paper. So yeah, it will. Practical papers में it doesn't make a difference because it is as good as you solving a practical question only. So it really doesn't make any difference. But then there are a couple of papers better in which it would help. Very nice, no? तुम्हारे तक तो नहीं आएगा, टेंशन मत लो. आगे देखा जाएगा ना, जिसका जो करना है करो. Now guys, back to this beta. Existing debt markets are under pressure due to ongoing RBI action on NPS. I also told you that, right? Foundation exam can be taken whenever you want, guys. This is likely to get implemented by 2026 or 27. You do not have to wait for a specific date to write. You just have to book your slot at an examination center, go write the exam and come. You do not do well, go book a slot again, write it. That's it. But that would mean, guys, bringing back 100% objective. Account should be converted into 100% objective. Max so aise hai beta. Law also should be converted into 100%. Computer based exam, guys, it is only going to be objective. It is not going to be subjective. Because you have to just book a center and write. And you will know the result then and there, guys. मतलब घर जाके रोना वो सब नहीं. वहीं का वहीं देख लो, खत्म करो. हाँ? And you cannot even complain कि वो power चले गया था बोल के, because it is not at your home as such, guys. You have to go there and write. वरना every exam you give that excuse ना बेटा normally कि वो जब भी power चले गया सर, system off हो गया, exam automatically submit हो गया, वरना I was going to write amazingly well बोल के. So the existing debt markets are under pressure due to ongoing RBI action on NPAs of the commercial bank. Due to challenges in raising the debt funds, the company will have to offer 100 rupees face value debentures at an attractive yield of 9.5% and a coupon rate of 8% to the investors. If you recall beta, yesterday while I was solving additional questions, I told you whenever they give yield beta that is to be given to investors, first thing that you compute beta is market price. Saraswati does not want to answer a little louder, but then you end up answering all the right ones only, no? You don't want to be in the limelight. You do not want people to know that you know all the answers. तब से एक के ऊपर एक बेटा हर एक आंसर करेक्ट बोलते जा रही है, बट चुपके से अपने आप को बस. So yes beta, the first thing that you do beta is compute market price, guys. Once you compute market price beta, you know that there are issue expenses. You will deduct those 4% beta of the proceeds. You know what is your net proceeds. Using that net proceeds beta, you're going to compute your cost of debt. Are we clear? But first beta, they've asked us to compute cost of equity. तो है ये बेटा, ऊपर cost of equity का information है ना. Yeah, and then beta it's in relation to debt. Are we clear about this? Then preference shares will have a face value of 1,000, each offering a dividend rate of 10%. They will be redeemed. They'll be issued at a premium of 5%, redeemed at a premium of 10%. At the same time at which debentures will be redeemed. That means debentures also have a maturity period of 10 years. ऊपर नहीं दिया, यहाँ पे दिया हुआ है. Yes or no? CFO of the company is evaluating a new battery technology to invest the above raised money. Technology is expected to have a life of 7 years. It will generate an after-tax marginal operating cash flow of 25 lakhs per annum. Assume a tax rate of 27% and answer all the following bits. Alright guys, pretty simple. We will start with cost of equity first. Shall we start, guys? Cost of equity beta. EPS is given as how much? Go back to that information, guys. First page pe jo information, the previous page pe, guys. EPS is given as 20 rupees. What is your payout ratio, guys? 40%. That means D naught beta will be equal to 8 rupees. Correct, guys? D naught beta will be equal to 8 rupees. After that beta, PE ratio is 15 times. Therefore guys, your MPS is equal to EPS into PE ratio. That will become 20 into 15 beta, 300 rupees. Your retention ratio guys is 60%. Isn't that 60% guys? 1 minus payout ratio beta, that will be 60%. R beta is how much? 20%. What will be your growth rate guys? B into R. 60% guys of 20%. So your growth rate is 12%. Growth rate guys is 12%. What will be D1 beta? D naught into 1 plus growth rate, that will be 8 rupees beta into 1 plus 0.12 beta, that will be 8. Now compute cost of equity guys, that will be D1 by P naught plus growth rate. 8.96 divided by 300 beta plus 0.12, 14.9866, that is 14.99%. मैं तुमको पहले ही बोला था बेटा that this 14 option D को 14.99 कर दो बेटा, वो misprint हुआ actually, it is not 4.99. In fact even option A beta is 12.99. How the hell will cost of equity be beta? It is 12.99, 11.99, 13.99 and 14.99. The correct answer is option D. Samiksha A. The correct answer is option D guys. A नहीं, उसको वो mark करो बोल रहा हूँ पेपर के ऊपर A बोल के. हाँ. She has to tell me beta what all mistakes. Correct answer is 14.99%. Now guys, cost of debt के लिए बेटा first I will have to compute what guys? Issue price. कूपन रेट कितना है बेटा? फेस वैल्यू कितना है? नहीं दिया हुआ है तो फेस वैल्यू 100. दिया हुआ है क्या? हाँ. कूपन रेट कितना है बेटा? कूपन रेट, interest amount per annum beta will be 8 rupees. And then beta maturity period कितना है? 10 years. Nothing is given. Redemption value will be 100. Guys, when you compute issue price beta, please do not take interest amount net of taxes. ठीक है. Yield to investors कितना है? So compute guys what beta? Issue price will be equal to present value of cash flows discounted at what percent? If investors want 9.5% beta, won't they discount all the cash flows at 9.5%? So please discount all the cash flows at 9.5%, but that will be equal to 8 rupees into PVAF at what rate? 9.5% for 10 years plus 100 rupees into PVF at 9.5% for the 10th year. 8 rupees into PVAF and then 100 rupees into present value factor. Answer match हो गया? First bit guys, calculate the issue price of equity share 90.58. Please check guys, whenever yield is given beta, please discount the cash flows. Yesterday do you remember beta that the yield on similar debentures is 12% but we want to give 13%. So what did we do? First computed market price by discounting all the cash flows at 13%. Yesterday only we did a question on that. Now guys, what will be your net proceeds? Issue price minus what is the expenses that we are incurring? 4% है ना? 5% है? 90.58 minus 4% expenditure guys. 86 point? Round off to 2 decimal points. 86.96. $86.96 guys is the net proceeds. Any doubt in this? क्या doubt है बेटा Sanchal? How will you compute cost of debt beta now? They've asked us to use approximation method. It will be interest amount into 1 minus tax rate plus RV minus NP divided by N whole divided by RV plus NP by 2. Interest amount is how much beta? 8 rupees into tax rate is 27 7% plus RV beta is 100 minus 86.96 divided by 10 years, whole divided by 100 plus 86.96 divided by 2. कितना बेटा? मैच हुआ perfect? 7.64%. This is the answer to the third bit, guys. Online students, I hope you've got the answers better. If you have doubts, text in the chat box. This is not for the ones that are watching it on YouTube later. If you just no chat box there, you can directly send a message to me on Telegram. Did you all get this answer, guys? We still have to compute KPF beta using shortcut method only. Face value kitna hai beta? 1000. Issue price. Are we not issuing at premium? 1050. Redemption value beta. We are redeeming at 10% premium. 1100. Preference dividend per annum kitna hai beta? 10% guys of 1000 rupees. Please do not write 10 rupees, but it is 100 rupees. Maturity period is 10 years. Same formula guys and get KPF. Preference dividend. यहाँ पे there will be no tax savings. Plus redemption value beta minus net proceeds divided by N. How much will this be, guys? 9.7? 76777% beta as per the question. This is KPF, guys. समझ में आ गया सबको ये? We still have to compute overall cost of capital क्या थी? Guys, if you're all done with this bit, let us look at the last bit. It says overall cost of what, guys? What is the difference? Marginal cost of capital and WACC? Marginal cost of capital is WACC only of additional funds. Excellent, guys. So we have to now compute KO, guys, of only additional funds. The new capital that we are raising, guys. How much money are we getting in the form of equity? 40 lakhs, guys. How much money are we getting in the form of preference share capital? How much money in the form of debt? All put together 120 lakhs. Did we all compute their cost of capitals? How much is cost of equity, guys? 14.99%. Preference share capital 9.77. Debt beta. Please arrive at KO, guys, using all of this. 515 beta, that is 10.52%. Compute करो रे तुम लोग, direct मत लिखो. Online students, please check. If you're all done with this, but I will start the next one. ऋत्विक आया देखो, केओ कंप्यूट किया तू? 10.515 आया या कुछ और आया? 10.515 आया। वेट्स क्या क्या लिया बेटा? वेट्स लिखा ही नहीं, कैलकुलेटर पे करा डायरेक्ट। कैसे करा एक बार बोलिए। तो अभी पहली बार कर रहा है बेटा। गुड बेटा। Yes, guys. Are we all done? Shall we start reading the next question, guys? Exact same question, but we have already done in the class. Finally, something. याद आया ना कुछ तो वो देख के? MNP Limited is a multinational company. Shall we start the next one? MNP Limited is a multinational company having its operations spread mostly in India and neighboring countries of India. The promoters of the company believed that the capital structure of a company must be kept flexible and balanced, where proper mix should always be maintained between debt and equity. Such mix of debt and equity should be reviewed from time to time, keeping in mind the changing situation of India and the global scenario. Right now, we have 9% debentures, 2,75,000, 11% preference shares, 2,25,000, equity shares, 5 lakhs, total capital, 10 lakhs. Total of 2,75,000, 2,25,000 and 5 lakhs is 10 lakhs. The following are some of the additional information provided by MNP Limited relating to the above mentioned capital structure. Rupees 100 per debenture redeemable at par has 2% flotation cost and 10 years of maturity. Market price per debenture is 105. Whenever market price is given, how do you compute cost of debt? Net proceeds will be based on market price. Do you recall this better? So your net proceeds will be 105 minus 2%. 102.9. Using that beta, you're going to get cost of debt. Are you getting the point, guys? 100 rupees per preference share redeemable at par has 3% flotation cost and 10 years of maturity. Market price per preference share is, I believe beta, even the figures were same in the class. We did an exact same question with a similar figures. So 106 beta. Equity share has 4 rupees flotation cost and market price of the share is 24. Next year expected dividend beta is 2 rupees with an annual growth rate of 5%. The firm has a practice of paying all earnings in the form of dividends. So this is to tell you better that you are not computing cost of retained earnings, you are computing cost of equity. And cost of equity mein we do consider flotation cost. For cost of retained earnings, we do not consider flotation cost. Are you trying to recall that बेटा? So, आगे का भाग में क्या बेटा, मतलब आगे का information let us ignore for a minute aside बेटा. Can you quickly compute cost of debt, cost of equity and cost of preference share capital, guys? Shortcut method use कर सकते हो बेटा. Use net proceeds that we have just discussed, guys, and do it. Online students do it बेटा. I'll be back in a minute. Yes beta, अभी all done. कितना है बेटा आंसर्स गौरव? कॉस्ट ऑफ डेट कितना आया? 5 point. For cost of debt beta, can you tell me the values guys? Face value is 100 beta, net proceeds will be 105 minus what percentage? 2%. 2.9. Redemption value unless otherwise given 100 rupees. Maturity period how many years? 10 years beta. Coupon rate 9% beta. Tax rate 35%. The formula beta that I have written so many times in this document guys. Did I? Cost of debt guys, I'm directly writing the answer beta. 10 rupees multiplied by 9 rupees multiplied by 1 minus tax rate beta plus 100 minus 102.9 divided by 10 years whole divided by 100 plus 102.9 divided by 2. How much is this? 5.48. This is the answer guys to the second bit. Cost of preference share capital guys. Again face value 100 beta. Net proceeds is 106 minus what percentage flotation cost? 3% beta. कितना है ये? 102.82. Redemption value is 100 guys. Maturity 10 years. Preference dividend rate 11%. यहाँ पे tax rate नहीं आएगा guys. So you'll write KPF beta will be 11 rupees plus 100 minus 102.82 divided by 10 years whole divided by 100 plus 102.82 divided by 2 years. How much will this be guys? 10.57%. This is KPF. Tax rate मत लेना बेटा इसमें. This is preference guys. There will be no tax savings. Did you get these answers beta? After this guys, cost of equity. Cost of equity के लिए which method are we supposed to follow? D1 beta is 2. P0 beta is 24 minus 4. 20 rupees growth rate 5%. So your cost of equity beta will be D1 divided by P0 plus growth rate. 2 divided by 20 plus 0.05. How much is the answer? 15%. They're asking us to compute WACC using market value weights guys. Do not forget using market value weights. Are you all done with these three things? Cost of debt is 5.48. Cost of preference share capital 10.57. Cost of equity is 15%. Please compute weighted average cost of capital beta using market value weights. $12.7968. हो गया मार्केट वैल्यू वेट्स पे. विल टेक वैल्यू ऑफ डिबेंचर्स एज इनटू 105. So that is 12.80. Last bit is independent bit altogether better. It's no way related to the previous bits. Guess did you all get the answer to this? Cost of equity beta is 15%. Cost of preference share capital 10.57%. They're asking us to compute KO beta using market value weights. First क्या बेटा वहाँ पे डिबेंचर्स है. डिबेंचर्स का बुक वैल्यू कितना था? 2,75,000 is divided by 100 multiplied by 105. What will be the market value? 2,88,750. Then beta is preference shares. Book value is 2,25,000 divided by 100 into 106. 2,38,500. Finally beta equity shares. How many equity shares beta? 5 lakhs divided by face value 10, market value 24. 12 lakhs. इनका सबका total. Guys, you have the same bit in your materials guys already. You can copy the values guys and then you can write refer notebook notes. This is 10.57 and this is 15%. You will get KO beta based on this as 12.7968%, which is approximately equal to 12.8%. This is what you will write, guys. समझ में आया बेटा क्या बोल रहा हूँ? हाँ. This is your KO, guys, 12.8%. Are we clear, kids? Next वाला बेटा, last वाला भी हो गया, fifth bit. They're just asking us to compute price using a dividend of 2 rupees, cost of equity of 10% and growth rate of Are we all done, guys? Fifth bit का आंसर बेटा D1 should be 2 rupees, cost of equity 10%, growth rate 5%. The market price of the share beta will become D1 divided by KE minus G. 2 divided by 10 minus 5, 5%, 40 rupees. This will become the intrinsic value, guys, of the current market price of the share. Are we all clear about this? Avesh हो गया? Sixth question, guys. क्या राशि आगे के क्वेश्चंस देख रही है? Sixth easy है बेटा, seventh easy है. Eighth वाला थोड़ा कैलकुलेशन है. Ninth one is adjusted present value. Do you remember adjusted present value? We did one question in the class. Capital budgeting में. मोदी गिलानी मिलर approach. जान दो बेटा. Anyways, they've removed it from the new materials of ISA. Base case NPV, perfect बेटा. हाँ कुछ तो याद आ रहा है. Base case NPV plus tax advantage on account of debt. Anyways, guys, back to this better. Question number 6. XYZ Industries Limited is a renowned player in manufacturing sector. It has been contemplating an ambitious expansion program. To finance this growth, the company scrutinizes its current capital structure, which is a blend of equity, retained earnings, preference shares, and debentures. The equity base of XYZ Industries Limited is robust, with 40,000 equity shares valued at 100 rupees each, amounting to a substantial 40 lakh rupees. This equity foundation is bolstered by retained earnings of 10 lakhs, reflecting the company's prudent profit reinvestment strategy. In addition to equity, XYZ Industries Limited has diversified its financing through 9% preference shares and 7% debentures, each contributing 25 lakhs to your capital pool. Instead of just telling you what is your existing capital better, equity 40 lakhs, retained earnings 10 lakhs, preference shares 25 lakhs, debentures 25 lakhs. We have so much information being given. Case scenario. Are we clear, guys? The strategic mix of debt and equity showcases the company's balanced approach to leveraging and risk management. अच्छा writer लिखा बेटा question. The company's capital yields a healthy return of 12% on capital employed, indicative of its operational efficiency and market competitiveness. ROI is 12%. This is not KO, guys. This is return that you are generating on your capital employed. So this will become ROI, ROCE. Okay? By default, beta, this will be pre-tax and not post-tax. That means right now your EBIT should be 12 lakhs. Excellent. 12% of 100 lakhs. Your total capital base is 100 lakhs, guys. Uska 12%. It will become 12 lakhs. समझ में आ रहा है नहीं आ रहा है बेटा? You can write that beta by default pre-tax. However, it operates in a high tax environment with an income tax rate of 50%, which significantly impacts its earnings and available reinvestment capital. This is another hint beta that is telling us that though return is 12%, tax is killing our return. That means 12% will be pre-tax or post-tax. That is why tax is killing our return. Yes or no beta? Faced with the need to raise an additional 25 lakhs for its expansion program, XYZ Industries Limited stands at crossroads. The decision to fund this venture will require careful consideration of the cost of capital, tax implications, and the impact on shareholder value. The management must evaluate whether to use more equity shares. अभी तक बेटा जो भी इंफॉर्मेशन है उसमें क्या रेलेवेंट है क्या नहीं है समझ में आ गया ना. Existing capital 100 lakhs, additional capital to be raised 25 lakhs. Total capital base will become 125 lakhs. Existing ROI 12%. All right, guys. That is pre-tax or post-tax? Tax rate is 50%. Issuing equity could dilute current shareholders' value but would not increase the company's debt burden. Preference shares offer a fixed return to investors and have priority over equity in profit distribution but come at a higher cost than debt. They're explaining what all the instruments means, guys. Debentures are less expensive due to tax deductible interest, but they increase our financial risk. XYZ Industry Limited's journey towards expansion is not just about raising funds, but also about maintaining a delicate balance between growth aspirations and financial stability. Background music was not required, guys. The company's choice will set a precedent for its future financial strategies and market reputation. Pura para udaye to bhi chalta, guys. Faced with the challenge of capital structure decision making to finance the expansion program, the finance manager is considering the following alternatives. This is a classic example, guys, of how we can magnify problems first. Even if it is, such a small problem as such better, real life problems also, the way we react to it as such better is as if, something huge has happened. And then in the end, I am a very tough guy. I can manage things in my life. I did it, well, ke. Yes or no? क्या done है? गिर गया था, खून जैसे लगा था, कोई गुटखा थूक दिया था. समझ में आ रहा ना बेटा? Issue of 20,000 equity shares at a premium of 25 rupees per share. This is how beta you will raise what amount? 25 lakhs. Face value per share beta is 100 rupees. 100 plus 25, 125. 125 into 20,000 shares, 25 lakhs. Correct hai na? Issue of 10% preference shares, issue of 8% debentures. The company has estimated that P ratios in the cases of equity preference and debenture financing would be 20, 17 and 16 respectively. You are required to evaluate the various financial alternatives considering three plans proposed. Plan 1, Plan 2 and Plan 3. Based on the information provided above, you're required to answer the following MCQs. Let us ignore the MCQs, guys. We will just present profitability statement under all the three options. Nothing is given, that means your ROI beta will remain fixed. Do you remember, guys? Whenever a company, ये capital structure में करे थे बेटा. Whenever a company goes in for expansion, if nothing is given, we assume beta whatever is your existing ROI will continue to apply to expanded capital base. हाँ या ना, guys? Yes or no, kids? Let us write about existing capital structure, guys, first, and existing EBIT, and then revised EBIT. आप लिखो सर, हम कॉपी करते हैं. Existing capital बेटा. Guys, question बहुत easy है, guys. Equity share capital, guys. How many shares बेटा? 40,000, guys. वो नया capital base है. Retained earnings, guys, are I'm writing existing capital base बेटा, जो ऊपर दिया हुआ है. लास्ट तक आते आते वो भूल गए ना अपन. 10 lakhs, guys. 9%. This is not cost of capital chapter, guys. We do not have to worry about computing cost of capital. 9% preference shares, guys, are 25 lakhs. 7% debentures, guys, are. This is our existing capital base, beta. All put together, it is 100 lakhs. What is our ROI, guys? So what will be your existing EBIT? Very good, guys. Existing EBIT beta will be 12 lakhs. Correct, kids? Now, after expansion beta, what will be your capital base? capital base beta will become 100 lakhs plus 25, 125 lakhs. What will be your EBIT beta? 12% of 125 lakhs beta kitna hai? This will be your EBIT guys. After expansion, your capital base will increase to 125 lakhs. Your EBIT beta will become 15 lakhs. Any doubt in this? Any doubt in this? समझ में आ गया बेटा ये? Next guys. Now we have three financial plans guys. Plan 1, Plan 2 and Plan 3. Plan 1, Plan 2 and Plan 3 guys. Plan 1 beta is equity. Additional capital. How beta? 20,000 shares. Correct? Plan 2 beta is preference or debt? Preference shares guys. क्या percentage beta? 10% preference shares, 25 lakhs. Last beta is 8% debentures. You just have to present profitability statement guys now. Can we do that guys? सब लोग फटाफट करो बेटा. You do not have to copy guys. You know all of this. You remember guys, irrespective of your capital base, ROI cannot change. What will change beta is things after ROI. I used to tell beta, whether you are borrowing money, whether you are raising it from your friends or whatever guys, ROI cannot change. Interest guys, existing interest kitna hai beta? That will come under all the three alternatives. Do not forget beta, there is existing capital base as well. कितना बेटा? 1 लाख. ये तीनों में आएगा बेटा. Additional interest beta, new capital पे will come only under the third alternative. What is that guys? Additional interest guys will come only under the third alternative, that is 2 lakhs. This will become your EBT. 13 lakhs 25,000, 13 lakhs 25,000 and 11 lakh 25,000. What is your tax rate guys? Taxes are applicable at the rate of 50% guys. So what will be your EAT guys? 6 lakhs 62,500. Please check guys. 662,500. This will be 5 lakh 62,000. Now you will have to deduct preference dividend. Do not forget beta that there is existing preference dividend also. Kitna hai beta existing? Existing preference dividend beta 2 lakh. This will come under all the three alternatives guys. Hi Anna beta. And additional preference dividend will come only under second alternative. Additional. That will be 2 lakh 50,000. Once you do this beta, you will get earnings attributable to equity shareholders. And that beta will become earnings attributable to equity shareholders guys. Four lakh 37,500 minus 2 lakh 50, 1 lakh 87,500. Last one 37,500. Number of equity shares guys. First alternative mein beta we are issuing 20,000 more shares. So will they become 60,000? Next alternative mein we have only 40. Third alternative mein we have only 40. Can we compute EPS better? 4 lakh 37,500 guys divided by 60,000. 7.2916. Can I just write 7.29 बेटा? Because question में 2 decimal point ही दे रहा है, ठीक है? Next वाला बेटा 687. So say 69. Next 44. I'm just matching it with the answers given in the question बेटा, 2 decimal points. Next बेटा is P ratio guys. First alternative में P ratio कितना बेटा? 20 times. Next market price per share guys. You'll write EPS multiplied by PE ratio 145.8. 0 हो गया बेटा सब मैच. All the answers done, guys. If you want, you can quickly go through the MCQs once. But we are done with all the bits. All the bits are based on just this profitability statement. They've asked to compute PAT. They've asked to compute preference dividend. They've asked to compute क्या बेटा earnings available to equity shareholders, EPS and MPS. Online students, just check the values better. We're done with all the options. Is this clear? Josna done? हो गया बेटा? Are we all done, guys? Any doubt in this, kids? 6 questions done, better. Next one, guys, 7th one. Question number 7, guys. Abhishek, looking for something, better. Shall we start the 7th one, guys? Very easy question again, better. Best company declared itself as best, better. It's a prominent company in semiconductors industry, aims to understand the impact of operating and combined leverage on its financial performance for the year ending on 31st of March 2024. By examining the provided financial details, the company seeks to make informed decisions regarding its cost structure and financing mix. Cost structure is measured by operating leverage, financial structure is measured by financial leverage. याद है नहीं है बेटा? How do you compute operating leverage? Contribution divided by EBIT. The other formula is percentage change in EBIT divided by percentage change in sales or contribution. How do you compute financial leverage? EBIT by EBT. But if that is preference dividend, you will have to write EBIT divided by EBT minus preference dividend by 1 minus tax rate. I told you that you gross up preference dividend for the amount of taxes because you're making pre-tax adjustment. Yes or no, guys? Now, beta, here. It says for the last year, beta, we have fixed cost 2040 lakhs, sales 30,000 lakhs, 12% debentures, equity share capital, income tax rate. We do not have all the details, guys. We know what is the amount of interest, we know what is the amount of fixed cost, we know what is the amount of sales. We still do not know what is variable cost contribution. Hayana. Mr. Pallav Kumar, an executive director from engineering background, discussed following analysis with CA Nagarjuna, additional director finance of the company. Operating leverage is currently 1.4, which measures the impact of fixed cost on the company's operating income. I know what is the amount of fixed cost, I know what is operating leverage. Can I compute contribution or EBIT? We have done similar questions, guys. Using interest, we computed EBIT or EBT. Yes or no, guys? Combined leverage considers both operating and financial leverage. It is calculated as a product of operating leverage and financial leverage. And company's combined leverage is 2.8. Pretty normal, right? If your combined leverage is 2.8, operating leverage is 1.4. That means financial leverage is 2 times. CA Nagarjuna explained to Mr. Pallav that finance department is already analyzing the various leverages like operating leverage, financial leverage and combined leverage. Due to these, Best Limited gains insights into its cost structure and financial risk. These information enables the company to make strategic decisions regarding its operating expenses, financing options and overall business strategy. Continuous monitoring and evaluation of leverage ratios will be essential for Best Limited to maintain financial stability and drive sustainable growth in the competitive market landscape. ये सब होने के बाद ना चुपचाप calculate all the values. See guys, indirectly they're trying to tell us what is the advantage of computing leverages and all of that, but then ultimately answer to mark MCQ करना ना बेटा. So can we present the profitability statement, guys? Pretty simple question, right? Question number 7. हो गया तेरा ये? Sales बेटा नहीं आया ना रिजल्ट अभी. सेल्स गाइस इज हाउ मच बेटा? अभी तक तो वो वेबसाइट भी अपडेट नहीं हुई बेटा, टाइम है, 1 घंटा तो लगेगा ही लगेगा। लिख रहा होगा इस, कुछ और बात कर रहा था, जान ले लो मेरी, 1 सेकंड के लिए भी ब्रेक लिया तो। तुम लोग रुको रे, अभी मैं बताता हूँ। वेरिएबल कॉस्ट बेटा वी डू नॉट नो, फिक्स कॉस्ट इज हाउ मच गाइस? 2040 lakhs. This differential will give us EBIT that we do not know guys. Interest 21,250 into this. पहले बेटा let us use operating leverage and arrive at the amount of contribution guys. उसके बाद में we will write all of that. Just in case financial leverage does not match, there can be additional interest, no? याद है नहीं है? अब वो मैच हुआ तो अभी नहीं मालूम है ना, because everything is given. What if information does not match guys? So that is why बेटा first we will compute what guys? Use operating leverage. Formula क्या है बेटा? Contribution divided by EBIT. Can I write contribution better as EBIT plus fixed cost divided by EBIT? You know what is operating leverage better? That is 1 point. This is equal to EBIT plus fixed cost divide, fixed cost कितना है? 2040 divided by EBIT. हाँ बेटा, फाइव वन EBIT is 5100. Please check beta if you all got the answers. Contribution guys. हाँ बेटा, 7,000. Variable cost 28,000. 22,860. What is the amount of interest beta here? On debentures beta we have 2,000. Perfect match हो रहा है बेटा, उतना ही है बस. Because if you take EBIT by EBT guys, are you not getting 2 times? हाँ या ना बेटा? That means there's no other interest guys. अगर ये match नहीं होता बेटा, I would have taken balancing figure as some other interest. We did that in one question in class. और एक क्वेश्चन में भी ignored financial leverage because I cannot take. Already बेटा जो interest आना चाहिए leverage के हिसाब से, that was less than 2,550 also. There were 2 set of questions that we did in class. One beta I told you that it is contradictory information. In the other I told you let us take it as balancing interest. अर्थम होता है लेदा. Now guys, tax कितना है बेटा? So what will be your EAT? This itself will be earnings attributable to equity shareholders. How much is that? 1785 guys. Number of equity shares but are 1700 lakhs. 17,000 divided by 10 beta. 1700. What will be your EPS? 1.05. क्या क्या कंप्यूट करना है बेटा? फर्स्ट बिट फाइनेंशियल लेवरेज हो गया ना. फाइनेंशियल लेवरेज गाइस विल बी EBIT divided by EBT, or you can also use the concept of operating leverage and combined leverage. 5,100 by 2,550 beta 2 times. Next guys, we are done with financial leverage. We are done with PV ratio कितना है बेटा? Contribution divided by sales guys. So that will be 23.8%. Asset turnover ratio guys. Take total assets beta as equal to total capital employed. Total capital employed कितना है? $38,250. So asset turnover ratio is 30,000 divided by 38,250. Check करो बेटा कोई. No बेटा, turnover ratio is not in percentage. Times है 0.784 times. So once you compute this beta for asset turnover ratio guys, you will write total assets beta should be equal to total capital employed. So total capital employed beta is equal to how much? You will write 21,250 plus 17,000, 38,250. Using this you can get your asset turnover ratio guys. Now asset turnover ratio beta will be equal to sales divided by assets. Sales kitne beta 30,000, assets are 38,250, so that'll become 0.784 times. These are the answers. Pretty simple, right guys? 0.784 guys is your asset turnover ratio. We still have to compute one more bit guys. What is that beta? Minimum level of sales which must be attained to at least pay finance cost. Financial break-even point. Not just normal break-even. Finance cost भी pay करना है ना बेटा. So take earnings after tax as 0 and work backward. तो सिर्फ operating break-even point करिए ना. Fixed cost divided by PV ratio. Yeah, earnings after tax 0 and earnings before tax is also 0. Why will you pay tax if the... अरे समझ में आ रहा ना? Control bit. I understand that you're a little stressed out. No. Right. Yes, beta. Asset turnover ratio is 0.74 guys. Last bit guys, EPS should be 0. That means EAT beta will be 0. That means EBT beta should be 0. EBT 0 है. Add back interest कितना है बेटा? 2,550. You will write EBIT as 2,550. Add back fixed cost 2,040. How much will be your contribution guys? 49. PV ratio कितना है बेटा अपना? 23.8%. How much will be your sales guys? 4590 divided by 23.8%. 19,285.7. That is 19,286 lakhs. You can definitely use combined leverage formula better. Your EPS should reduce by 100%. That means your sales should reduce by 100% divided by 2.8. कितना है वो? नहीं कर सकते ऐसा. हाँ सेल्स कर सकते हैं ऐसा, नो डाउट. 100% divided by 2.8 better. Reduce this from 30 lakhs. You can also use the concept of leverage better to compute percentage change in sales and then arrive at revised sales. If you recall, there were 1 or 2 questions in which they were clear that you should only use the concept of leverage and then compute percentage changes. Are we clear about this guys? 10th question beta after this. We'll come to the other questions later. First 10th one. थोड़े extra ज़्यादा questions कर ले तो एक. 12th one is very simple beta. So we'll finish off a couple of questions more. Question number 10 guys. अभी तक कितने हुए? 7 हुए ना? 8. 1 now. 8th, नहीं 10th one बेटा now. पढ़ू बेटा मैं भी. Is everyone done with this? Question number 10 beta now. Online students, 10th question. Matangi is a news broadcasting channel having its broadcasting center in Chennai. Is that Matangi only then or Matangi? ठीक है बेटा. There are 200 employees in the organization including top management. As a part of employee benefit expenditure, the company serves tea to its employees. Do you recall doing a similar question in class? But वहाँ पे बेटा we computed tea, coffee, everything. यहाँ पे सब कुछ directly दिया हुआ है बेटा. They did not ask us to compute tea powder, sugar powder कितना लगता. Everything is directly given. वहाँ पे याद है 10% wastage of paper cups also. Then someone asked me, sir अगर paper cup waste हो रहा मतलब अंदर की चाय भी तो waste हो रही. Very good guys. I said नहीं, only cup waste हो रहा बेटा. Cup फट गया, चाय बेकार नहीं गई है. Now guys, the company offers tea 3 times a day to each of its employees. Assume all the 200 employees will have tea beta 3 times. यही देखो बेटा, discrimination. It is starting with that it has its broadcasting center in Chennai and they're serving what बेटा? कौन सा बंदा बेटा चाय पिएगा वहाँ पे? Yes ना? तुम्हारे को मिमिक्री करो वो तो रेलवे स्टेशन पे कैसे बेचना बोल के मिमिक्री कर रहे हैं. Yes guys, the third party charges rupees 10 for each cup of tea guys. and the company works for 200 days in a year. Obviously, beta holiday पे घर जाके चाय serve नहीं करोगे. So, how much is your annual expenditure on tea, beta now? 200 employees, 3 times a day, beta, 10 rupees per cup for 200 days in a year. 12 lakhs. 200 employees into 3 times, guys, into 10 rupees into 200 days. Right now, we are incurring 12 lakh rupees on tea, guys, chai in a year. Now, looking at the substantial amount of expenditure beta involved, the finance department has proposed to the management an installation of a master tea vending machine from Nirmal Limited, which will cost rupees 5 lakhs with a useful life of 5 years. Upon purchasing the machine, the company will have to incur annual maintenance, which will require a payment of 25,000 every year. Normal. You will save 12 lakh rupees, but you have to upfront pay how much, beta? 5 lakhs for installation, and then 25,000 is your annual maintenance cost. Machine would require electricity consumption of 500 units per month, and the current incremental cost of electricity for the company is 24 rupees per unit. 500 units into 24 rupees into 12 months. You will have to incur this electricity cost of 1,44,000. Apart from these running costs, the company will have to incur 8 lakhs for consumables like milk, tea, powder, paper cup, sugar, etc. ऐसा देना बेटा अच्छा रहता. They should not expect us to calculate 1 kg of sugar will give so many cups and all. So 8 lakhs is another expenditure. Company is in 25% tax bracket. Straight line method of depreciation is allowed for the purpose of taxation. Will we be able to compute CF80, guys? 12 lakh savings minus 25,000 maintenance minus electricity 1,44,000 minus 8 lakhs minus depreciation minus tax. Add back depreciation. Nirmal Limited. अब ये कहाँ चले गया बेटा? निर्मल के पास. We are which company? Matangi. Are we clear, guys? Nirmal Limited sells 100 master tea vending machines. Variable cost is 4,50,000 per machine. Selling price क्या है बेटा machine का? We are buying at 5 lakhs. That means selling price is 5 lakhs. And fixed operating cost is 25 lakhs. Capital structure of Matangi and Nirmal Limited is as follows. Risk-free rate of return is 5%, market return is 10%, beta of Matangi is 1.9. You are required to answer the following questions. First bit, guys, is about Nirmal. First 2 bits. They've ignored capital budgeting ka question. They're only concentrating on leverage of Nirmal. So you just have to present their profitability statement. You know how many units are they selling, you know variable cost, you know contribution, you know fixed cost, you know their capital structure. So you know interest, you know taxes. Can't you compute, guys, what is their operating leverage and combined leverage? Yes or no, guys? So can we first answer? Let us finish the first 2 bits better. So this is for which company, guys? Chalo beta, fatafat karenge, guys. Let us not waste time. Let's not waste time, guys. Let's finish this. Question number निर्मल. अरे फ्रेश पेज पे. गाइस लेवरेज करना आता है ना? तो सपने बाद में देखो बेटा, शुरू करो. नंबर ऑफ यूनिट्स कितने हैं बेटा पर ईयर? 100. सेलिंग प्राइस पर यूनिट 5 lakhs. वेरिएबल कॉस्ट पर यूनिट 4,50,000. Contribution per unit. Total contribution 50,000 into 100, guys. Fixed operating cost 25 lakhs. What is the amount of EBIT beta? Sorry. Look at the capital structure of Nirmal and tell me what is their interest. Look at the capital structure beta. You'll write 40 lakhs multiplied by 15%. That'll become how much? 6 lakhs. How much is your EBT, guys? यहाँ पे रुक जाओ क्या? Anyways, preference share capital नहीं है ना बेटा? Can we just stop here, guys? Because anyways there's no preference share capital. What will you do beta? 19 beta, sorry. So what is operating leverage, guys? Operating leverage beta will be contribution divided by EBIT. So that'll be 15 lakhs divided by 25 lakhs. 2 times. Financial leverage EBIT divided by EBT. 25 lakhs divided by 19 lakhs. 1.58 times. Combined leverage बेटा. Contribution divided by EBT. वो आंसर में कितने डेसिमल पॉइंट्स इसके हिसाब से प्लीज मैच इट गाइस. 15 lakhs divided by 19 lakhs. 2.63 times. This is your combined leverage. What is the first bit, guys? If sales increase by 10%, what will be the impact on EBIT? Kitna? How? Operating leverage is 2 times. That means for every 1% change in sales, operating profit will change by 2%. So for 10% change in sales, operating profit will change by 20%. Yes, beta, all of you please write this. सबका हो गया बेटा ये? Operating leverage, guys, is 2 times. That means for every 1% change in sales, guys, your operating profit will change by 2%. So for 10% change in sales, guys, your operating profit will change by 20%. This is the answer, guys, for Nirmal Limited. Now you have to talk from the viewpoint of Matangi Limited. Can you read the third bit, guys? क्या compute करो बोल रहा है? Discounting rate मतलब KO, guys. You have the entire table in front of you, बेटा ऊपर. Capital structure मालूम है बेटा नीचे. They've asked us to compute KE using CAPM. क्या हुआ भावेश, बुक खत्म हो गई? हाँ, मैं क्या पूछा? Did I ask in some other language? अरे यार तेरे को देख के बात कर रहा हूँ ना, मतलब तेरे से ही बात कर रहा हूँ ना. ये उम्र में होता है यार हमारे साथ. भावेश खुश हो रहा पीछे. Yes बेटा, third bit guys, can you all compute KO बेटा? First, KE कैसे compute करोगे guys? RF plus beta into RM minus RF. How much is risk-free return given guys? 5%. How much is beta factor? 1 point. Market return is 10% guys, not market risk premium. So into 10 minus 5. कितना बेटा ये? If nothing is given beta, can I write cost of debt as interest rate into 1 minus tax rate? Yes or no guys? 15% beta into tax rate कितना है बेटा? 25%. How much will this be guys? 11.25%. Cost of preference share capital beta will be directly equal to preference dividend rate guys. How much will that be beta? 12%. Now you have to compute KO guys. You know all the sources of capital guys. Compute KO guys after this. $13 point मैच हो गया ना? वेरी गुड गाइस. गाइस KO के लिए बेटा, व्हाट इज योर इक्विटी गाइस? अमाउंट इज 40 lakhs. Retained earnings 25 lakhs. 12% preference share capital beta is 12 lakhs. 15% debentures beta are 20 lakhs. All put together. Please take them beta and the cost of capitals, guys. Cost of equity, cost of retained earnings will be same, guys. That is 14.5%. This is 12%. This is 11.25. Directly write KO beta. We know बोल के. कितना है KO? 13.52% beta is your KO, guys. Did you all get this beta? हो गया क्या guys? Next beta, look at the next part of the question. Can you look at the next part of the question, guys? क्या बोल रहा है बेटा वो? Compute. Can we all start beta? What is your initial investment? 5 lakhs. What will be the life of this beta? 5 years. What will be your depreciation per annum, guys? 5 lakhs divided by 5 beta, that will be 1 lakh. Now, periodical cash flow, guys. Residual value नहीं है ना बेटा? What is the saving, guys, in T? 200 employees. 200 ही थे ना? They're drinking tea how many times? 3 times. Each time it is costing us 10 rupees. For how many days? So this will become 12 lakhs. Minus beta. What are all the expenses? Maintenance cost 25,000 minus power cost. How many units are we consuming? 500 units at the rate of per month into 12 months into rate per unit 24 rupees. How much will this be? What are the other expenses beta? Consumables 8 lakhs. Depreciation 1 lakh. What will be your profit before tax? 1 lakh 31 beta. Tax कितना है? 25%. PAT 98,250. To this, what will you add back? How much is that? CF80 beta is 1,98,000. Is that one of the requirements? है ना? Yeah, we got CF80 also, guys. All you have to do beta is now compute NPV. To compute NPV, guys, you have to first discount all the cash flows, guys, at what rate? What is the discounting rate? Overall cost of capital 13.52%. Discount all the cash flows at 13.52% and compare with the initial investment of 5 lakh rupees. Six more questions. Please discount all of these cash flows beta. Present value of cash inflows, guys, will be 1,98,250. Discounted at what rate beta? 13.52%. For how many years? 5 years. 6 lakhs 534, guys. Your investment beta is 5 lakhs. What is the NPV? 1,88,534. वहाँ पे 522 दिया हुआ है बेटा. Little difference here and there. ठीक है? If they give us discounting factors in the question beta, it's easier. Everyone would get the same answer. Wasn't this also pretty simple, guys? Yes or no beta? Yes, sir. 12th question, guys, now. One more question, then we'll take a break. बुक खत्म हो गई. अयो मैं क्या करूं बेटा, नाचूं? Yes guys, सोचो भी मत बेटा इमेजिन करने का, खींच के लगाऊंगा एक, वो लोग पीछे देख इमेजिन कर वो सही में नाच रहा बोल के. Today we have a special performance guys by Josna and Matley. They said they wanted to dance today. श्रीनिकेत का फोटो लगा देंगे ऐसे. श्रीनिकेत, if you're listening to this better later, जब भी. अरे मतलब प्रेजेंट मोमेंट में रे पागल फोटो लगा रहे, मतलब what are you talking about, useless. Question number 12 guys. Very simple question, very small question. Let's finish that beta so that we mentally know that we finished 9 questions. Okay, and only 6 will be pending after the break guys. Panendu. It's a very simple question guys. Feel free to read the question. मन में सोच रहे, you also feel free to read the question. All right guys, question number 12 बेटा. जीतू क्या हुआ बेटा, तब से क्या कर रहे? और एक पेपर होना उसको. ఏ బుక్ కావాలి? ఇది రాయలేదా? ఒక్క లైన్, విచ్ లైన్ సార్ చెప్పండి, లాస్ట్లోనా? ఇగో యాడ్ వ్యాగ్డ్ అది పైనది కింద రాసినావా 98 to 15? यस, ऊपर का अगर 98 to 50 है, नीचे का 1,98 to 50 है, तो व्हाट शुड बी द डिफरेंस अमाउंट गाइस? పైన డెప్రిసియేషన్ రాలేదా సార్? ఇగండి సార్, అయిపోయిందా? వెబ్ కంట్రోల్ KGF Chemicals is a prominent player in the chemical industry. It faces the challenge of determining its growth trajectory and dividend policy to maximize shareholders' value. आ गया क्या बेटा? अच्छा, मेरे को लगा रिजल्ट आ गया क्या बोल के, मैं खुद ही तब से देख रहा हूँ बेटा, अभी तक नहीं आया बोल के. वेबसाइट अपडेट भी नहीं भी, लाइट लो. हाँ, सो गाइस कहाँ पे था बेटा मैं? With expectations of significant growth in the near term and stabilization in the long run, the company must strategically manage its resources to align with investors' expectations. KGF is a leading manufacturer and supplier of specialty chemicals, catering to diverse industries such as pharma sector, agriculture and manufacturing. Established with a commitment to innovation and quality, the company has garnered a strong market presence over the years. The company is projected to experience robust growth at a rate of 14% per annum for the next 4 years. Relevant guys? What is the growth rate for the next 4 years? अभी तक का एक relevant point आ गया. Subsequently, the growth rate is expected to stabilize at the national economy's rate of 7% indefinitely. We are expected to grow at the rate of 7% for an indefinite period guys, and this is our economy's rate it seems guys. Hope we continue to grow at the rate of 7% for an indefinite period of time. The forecast reflects both the company's expansion plans and the broader economic landscape. KGF Chemicals paid a dividend of 2 per share last year. So that you do not know what is that, it says brackets mein, this is D naught. The management faces the crucial decision of balancing dividend payouts with reinvestment opportunities to sustain growth and meet shareholders' expectations. The dividend policy must strike a delicate balance between rewarding shareholders and retaining earnings for future investments. जो भी लिखता बेटा, क्या लिखता यार, मतलब सोचो. The required, अपन को कुछ लिखो बोले तो pay dividend. Yes or no guys? The required rate of return on equity shares is 12%, indicating investors' expected return given the company's risk profile and market conditions. K is 12%. अभी तक बेटा what all information is relevant, मतलब we need. D naught is 2 rupees. Growth rate is 14% for 4 years. After that it is stabilizing at. Management must carefully assess investment opportunities to ensure they meet or exceed this threshold, thereby generating value for shareholders over the long term. In navigating the dynamic landscape of the chemical industry, KGF Chemical Limited must adopt a proactive approach to managing growth and dividend policy. ऐसा लग रहा मेरे को असेंबली में खड़ा करा दिए, वो रहता ना बच्चा एक एक स्टूडेंट जाके पढ़ना बोल के थोड़ी देर वहाँ पे. And I'm trying my best to top this game. By aligning strategic decisions with investor expectations and market dynamics, हार गया बेटा मैं. The company can position itself for sustainable success while maximizing shareholder value. Continual evaluation and adaptation will be essential to capitalize on growth opportunities and maintain competitiveness in the evolving marketplace. You're required to answer the following on the basis of above information. Same question, but अपने material में 2 line में रहता. Growth rate for the next 4 years 14%. After that 7%. D naught 2 rupees. KE 12%. Compute P naught. Yes or no, guys? वही compute करना है बेटा यहाँ पे. Nothing else. We just have to. Whenever growth rate is not stable, guys, what do you do, beta? You will compute present value of D1, D2, D3, D4 and P4. We can use the formula of constant growth perpetuity only for computing P4 because the growth rate is stabilizing after 4 years. Can we write this, guys? D naught is 2 rupees. Growth rate is how much, beta? 14% for the first 4 years. After that, beta, it will become 7%. KE कितना है? 12%. एक बार requirement देख लेना बेटा. Is asking us to compute expected value of dividend separately, market price at the end of 4th year, present value of market price also separately. So D1 beta will be 2 into 1.14. कितना है? यहाँ पे 4 decimal points है बेटा dividends. So please write up to 4 decimal points. All right. Next beta D2 2.28 into 1.14. 2.5992. D3 beta is 2.5992 into 1.14. 9631. D4 beta is 2.9631 into 1.14. This is the answer to the first bit, guys. Hi na, guys. This is requirement 1. D5 कितना हो जाएगा बेटा? 3.3779 into 1.07. 3.61443. P4 बेटा is D5. ये लोग थाईलैंड घूम के आए. Divided by 12. It's very funny beta. When you talk to them, no, you end up talking like that only. 3.6144 divided by 12% minus 7% beta. $72.28 bus. Answer to requirement 3, guys. Now beta P naught, guys, will be equal to what, guys? Present value of D1, D2, D3, D4 and P4. I will write D1 कितना है बेटा? 2.28 by 1.12. Cost of equity is 1.12%, guys. 12 whole square. 2.9631 divided by 1.12 whole cube. 3.3779 divided by 1.12 whole power 4, and then price beta is 72.28 divided by 1.12 whole power 4. Please compute the present value of this separately and this separately, guys, क्योंकि that is a requirement. समझ में आ रहा है ना? If asked us to compute present value of 4-year dividends, it should be 8.3655. And then compute present value of market price at the end of 4th year. $6,336. 8.3635 आ रहा है. $3,6,357. ऐसे कैसे डिफरेंस आ गया बेटा? Those dividends are correct, no? 2.28, 2.5992, 2.9631 and 3.3779. ठीक है बेटा? $49.935. यहाँ पे 45.79 है, यहाँ पे 0.14 का डिफरेंस है, वहाँ पे 0.14 का डिफरेंस है. Maybe they've taken discounting factors better only to the extent of 4 decimal points. That is why they're getting different answers. Can't help it, better. Maybe they've taken discounting factors only up to 4 decimal points. वो भी नहीं लिए, 3 लिए बेटा, छोड़ दो. हाँ, टोटल करो बेटा, कितना है? 54.29. We got all the answers, guys. All right. The answers better are 45.79, 54.33. Done with 9 case scenarios, guys. 6 more left. और क्या कर लो अभी? Before the break, हाँ? भूख लग रही है. Do we need to take a break now or afterwards? Now? क्या कुरकुरे खाना है? वही खाती ना तू ऐसे भी रोज. All right, guys. चलो बेटा, online students, we are taking a break now, but I'll resume after the break. See you guys. Bye bye.